Hello my dear CA intermediate students appearing for JAN'25 exam, the most awaited Mighty 50 questions video. So this Mighty 50 compared to May 24 and September 24, little bit I have modified and I am discussing all the questions, and I have included the latest RTP of JAN'25 as well. So JAN'25, then September 24 RTP questions and May 24 RTP questions are also included. So combining that, these 50 questions I have just made and including other questions also from different places. So covering the entire portion of GST that is applicable for your exam, I have given this. Okay. And without further delay, let's move on to this. And I cannot say that these 50 questions only will come in exam, definitely no. But these 50 questions, the concepts what you are going to learn will definitely be important concept. So that will be applicable for exam. So this is just the application of those concepts into the questions. Okay. Now you can say this, the first question, and where to get the PDF. It's there in the description to this video, or you can go to my website under downloads, you can find it, or you can see in the description to this video. And moreover, we have uploaded another video recently that is related to amendments for JAN'25 exam. That amendments covers not only JAN'25 amendments but also some amendments of September 24 as well. I mean May 24 and September 24 amendments as well are included in that. So you can just watch that video. Hardly it is like 2 hours 45 minutes to complete watching that amendments video. That will definitely be helpful. Plus this Mighty 50 video also you need to watch. Okay. So you can watch it in 1.5x speed so that you can complete watching it as soon as possible, and thereafter you can just practice these questions. Question number 1, this question is related to applicability of GST, that is basic concepts. Discuss the leviability of GST or otherwise on the following. Alcoholic liquor for human consumption. So we know that as per section 9 subsection 1 of CGST Act, on all commodities other than alcoholic liquor for human consumption and petroleum products, 9(1) and 9(2). So there is no levy of GST. Alcoholic liquor is completely excluded from the ambit of GST. So alcoholic liquor for human consumption, there is no GST. It is outside the ambit of GST. And you cannot just stop there. You have to also write that the existing duties. What are those existing duties? State excise duty is payable on manufacture of alcohol, and CST and VAT is also payable on sale of alcohol. So that aspect also you need to write in the answer. So state excise duty, then CST and VAT. Then second one, petroleum crude, diesel, petrol, aviation, turbine fuel and natural gas. These are the 5 petroleum products. On this also there is no GST as per 9 subsection 2. So if you want to give the section reference for this A point, you can give the reference of 9 subsection 1, section 9 subsection 1, and for this you can give the reference of section 9 subsection 2. On petroleum products, as and when GST Council decides it will come into the ambit of GST, till the time GST Council decides it will not be in the ambit of GST, it is excluded from the ambit of GST. And what are the existing levies that are applicable on petroleum products? We have central excise duty on manufacture of petroleum products, then CST and VAT on sale of petroleum products. So that point you need to write. Next, tobacco. So tobacco, as per the constitution, they have given a special status for tobacco and tobacco products, wherein it is covered under the ambit of GST, plus the central excise duty continued to be levied on tobacco and tobacco products. So therefore it is within the purview of GST. It is within the purview of GST. It is not excluded, and resultantly tobacco is subject to GST as well as central excise duty. Then opium, Indian hemp and other narcotic drugs and narcotics. So these are actually covered under the ambit of GST. We don't have any exclusion. This will not come under alcoholic liquor for human consumption. This is covered under the ambit of GST. We don't have any exclusion. However, the state excise duties are also applicable on this, because state excise duty is not subsumed into GST. State excise duty is outside the ambit of GST. So state excise duty is also applicable. So this is leviable to GST within the purview of GST, and even it is subject to GST as well as state excise duties. So on basic concepts, you may get a question like this. And you have to see the presentation. What are the points to be written in the answer? Okay. Next. Second question. Examine whether the activity of import of service in the following independent cases would amount to supply under section 7. And 7, to the extent possible, try to write the subsection and the clause also, so that will create a very good impression. Miss Srinidhi Kaushik received interior decoration service for her residence located at Bandra, Mumbai from Mr. Rachel of Sydney, Australia. The amount paid for the said service is 5,000 Australian dollars. So this is import of service for a consideration, because there is a consideration. Then you need to refer 7.1b, import of services for a consideration. First you need to write as per section 7.1b of CGST Act, import of services for a consideration, okay, whether or not in the course or furtherance of business constitute supply, like that you need to write. And in the present case, so Srinidhi Kaushik is importing interior decoration services, even though for personal purpose it is supply under 7.1b, like that you should conclude. Then next, number 2, Ms. Srinidhi Kaushik received interior decoration services for a residence located at Bandra, Mumbai from her brother. Brother, is brother covered under family? So family definition, who are all covered? So we have spouse and children, whether or not dependent, okay. And then we have brothers, sisters, parents, grandparents, if they are wholly and mainly dependent on that person, okay. And here brother Mr. Varun residing in Sydney, wholly dependent on Ms. Srinidhi. So dependent brother will come under family definition and related. Further, Ms. Srinidhi did not pay any consideration for the said service. So there is no consideration paid for this service, means 7.1c. Now what is it? You need to write as per section 7.1c, read with schedule 1. So whenever you are referring to 7.1c, write read with schedule 1 of CGST Act, import of services from a related person or another establishment without consideration, but it should be in the course or furtherance of business constitute supply. In the present case, it is import of services without consideration from a related person, but not in the course or furtherance of business, because it is for her residence. As it is for her residence, it is not in the course or furtherance of business. Consequently, it is not a supply, even though imported from related person. That's how we need to write. Even though the said service is imported from related person, but as the same is not in the course or furtherance of business, it is not a supply. Like that you should present, okay. Next, will your answer change in the above case if Ms. Srinidhi has taken interior decoration service with regard to her business premises and not her residence? Yes, definitely it will change, because then it will become import of services from a related person without consideration in the course or furtherance of business. This in the course or furtherance of business or not should be seen from whose perspective? Supplier point of view or recipient point of view? Generally, for import of services, we need to see from recipient point of view, and other cases it will be supplier point of view. Only for import of service. This is an import of service. So whether it is in the course or furtherance of business or not should be seen from the recipient perspective. So here Srinidhi point of view, business purpose, so it will become supply under 7.1c. So that is how we need to write. So as per section 7.1c, same, read with schedule 1, import of services without consideration from a related person in the course or furtherance of business constitute supply. In the present case, Ms. Srinidhi is importing the services for business purpose. Consequently, it is supply under 7.1c, like that, okay. So to the extent possible, try to use the section references and the legal language, and also family definition. If you have time, try to write that. So in like family, you can write family means spouse and children whether or not dependent, and brothers, sisters, parents, grandparents, if they are wholly and mainly dependent on that person. Hardly it will take 2 lines extra or 3 lines extra, but that will add value to the answer. So all the related points or parts related to that question, you try to write, so that will definitely help you to score maximum marks. See, it's not about you are writing for how many marks, so that is also important, but how effectively you are writing, because the problem is you write for 100 marks also, but what if you are not effectively writing that? So because of which you will lose. I'm not telling that you should not write for 100 marks. No, you should write that. And even here you need to improvise your presentation skills as well. Okay. Then next one, question number 3. Mr. Priyam, director of Sun Moon Company Private Limited, provided service to the company for remuneration of 1,25,000. Briefly answer whether GST is applicable in the below mentioned independent cases. If yes, who is liable to pay GST in this case? So we have director services to company covered under RCM. The moment when you are writing about RCM, so you need to bring in section 9 subsection 3 read with notification number 13 of 2017. Okay. So here we need to see first point, Mr. Priyam is an independent director of Sun Moon Company Private Limited and not an employee of the company. So we have to write it along with the circular. So first we need to start with as per section 9 subsection 3 read with notification number 13 of 2017. So services provided by director to a company or body corporate is chargeable to GST under reverse charge mechanism. Then also as per CBIC circular, if the remuneration paid by the company or body corporate to the director is chargeable to TDS under section 192 of Income Tax Act, then the money received by the director is taxable under the head salaries. Consequently, as per section 7 subsection 2 read with schedule 3. Okay, see the points. As per 7 subsection 2 read with schedule 3 of CGST Act, the said activity is not a supply or excluded from supply. Next, below that, point number 1, first point you are answering. In the present case, Mr. Priyam is an independent director and the remuneration to independent director is not subject to TDS under section 192 but subject to TDS under section 194J of Income Tax Act. Consequently, the money received by the director will be covered under profits and gains of business or profession and it is supply and it will be chargeable to GST under RCM. You understood now how to structure the answer. Then Mr. Priyam is an executive director, that is an employee of Sun Moon Company Private Limited. Out of the total remuneration amounting to 1,25,000, 60,000 has been declared as salaries in the books of Sun Moon Company Private Limited and subject to TDS under which section 192. Then that money which is received by the director will come under salaries. If it comes under salaries, it is excluded from supply, consequently not chargeable to GST. Whereas 65,000 has been declared separately other than salaries. So other than salaries means that money received will be coming under PGBP and in the Sun Moon Company Private Limited accounts and subject to TDS under 194J. Subject to TDS under 194J, so definitely it will be PGBP and it will be covered under supply, chargeable to GST under RCM. So that's what you need to write. Okay. So you need to just go through the paragraph later. So these are the key points that should be present. Notification reference, about the clarification, CBIC circular, then exclusion from supply, 7 subsection 2, read with schedule 3. Covering those points, you need to structure the answer. Okay. Then next. Question number 4. Mr. Jayesh, a registered supplier of Mumbai, received the following amounts in respect of various activities undertaken by him during the month of October 2022. Commission received as recovery agent from NBFC, non-banking finance company. So here, what is it we need to arrive at? So always when you see a question like this, you see the requirement, you see the last few lines, aggregate turnover of JH below that. You are required to compute because the answer lies there. Only when you know the requirement, you know how to interpret, what to interpret and what to present in the answer. So you are required to compute gross value of supplies on which GST payable by Mr. Jayesh for the month of October 2022. Value of supplies on which Jayesh is required to pay GST. First, commission means we need to bother about the exemptions and RCM. Commission received as a recovery agent from a NBFC. Recovery agent, we don't have any exemptions, so taxable. And recovery agent service is covered under RCM. So in that sir, CG, got salads, agent services. In that agents, we have 5 agents: insurance agent to insurance company, recovery agent to bank, financial institution, NBFC, and then we have direct selling agent other than body corporate or firm, and next we have business facilitator to banking company, and agent of business correspondent to business correspondent. In that recovery agent is there, remember, recovery agent to bank is only RCM, recovery agent to a dealer or recovery agent to some other person is not RCM, only recovery agent to a bank is RCM. So in this case it will be covered under RCM. So liability to pay GST is on recipient, so means bank or NBFC. So this is taxable, first it is taxable, but it will be covered under RCM. So means who will pay GST? NBFC will pay. So whether it should be included in the liability of Mr. Jayesh? No, it is not required to be included in the liability of Jayesh. Then next, actionable claim received from normal business debtors 10,50,000. So here 10,50,000 is what? Actionable claim. So we have to write as per, first point, what is it you will write? As per section 9 subsection 3, read with notification 13/2017, services provided by recovery agent to bank or NBFC is covered under RCM. Therefore, so the GST payable on 80,000 by NBFC and not by Mr. Jayesh. That's the explanation. Second point, we need to write as per section 7 subsection 2, read with schedule 3, actionable claims other than specified actionable claims are excluded from supply. What are the specified actionable claims? HC block, horse racing, casinos, betting, then lottery, online money gaming and gambling. Others are excluded from supply. So therefore this 10,50,000 you will write it as not a supply, excluded from supply. Either you can put a table and in the particulars itself you can write the explanation amount column, or you can just write whatever is given in the question, give the note reference, like this also you can write. But I prefer writing these notes inside the table itself. All these notes, when you start writing inside the table, so then and there we can complete it, and so that even valuer, when he reads it also, he will be giving the marks properly. Got it? So that is this. So first point, commission. Second, actionable claims, not a supply. Third, amount received from ABC Limited for performance of a classical dance in one program. So we have to write that exemption. For exemptions, you need to give the reference of section 11, read with notification 12/2017. As per section 11, read with notification 12/2017, services by a performance artist in classical or folk art form of music, dance or theatre is exempted if the consideration charged for such performance does not exceed 1,50,000. In the present case, even though it is a classical dance performance, but the consideration charged exceeds 1,50,000. See there, 1,74,500 exceeds 1,50,000. Consequently, it is taxable. And as it is not covered under RCM, it is chargeable to GST under FCM. We don't have RCM for performance artist. So therefore, it will be taxable under FCM, means whether GST payable by Mr. Jayesh, yes. So include it in the computation of liability for Mr. Jayesh, 1,74,500. And if it exceeds 1,50,000 per performance, whether entire amount is taxable? Yes, entire amount is taxable. Also, this exemption is not applicable if they are acting as a brand ambassador. Even if the amount does not exceed 1,50,000, check one more point, that whether they are acting as a brand ambassador. Next, point number 4, business assets, old computers given to a friend free of cost. The market value of all the computers was 51,000. No input tax credit has been availed on such computers when used for business. So disposal of business asset on which ITC is availed. So they have business asset that is disposed of, and ITC has been availed or not availed? Not availed. So you need to write as per section 7(1)(c), read with schedule 1, permanent transfer or disposal of business asset on which ITC is availed is supplied. In the present case, even though they disposed of the business asset without consideration, but ITC not availed. Consequently, it is not a supply. Okay, won't we apply other points? We don't have other points, na? Friend. Friend means not a related person. So DRIP, disposal of business asset will not come, related party will not come, import of service from related will not come, principal agent transaction will not come. Consequently, you will write it as not a supply. Okay. So answer is nil, not a supply. What if ITC has been availed? In the same question, what if ITC has been availed? Then it will become supply. And what will be the value? So the market value given, na? Usually market value will be taken when we don't have transaction value applicability, no consideration, market value, or related parties, market value, price is not sole consideration, market value, like that. Okay. So the market value will be given, we will take that market value. But if transaction value is given in the question, don't apply market value, transaction value only should be taken, provided conditions are satisfied. What are the conditions for transaction value? Two conditions: supplier and recipient should not be related, price must be the sole consideration. Okay. Next, consideration received for 1 month rent from a registered individual person for renting of a residential dwelling for use as residence. So we have an exemption. Again, we need to write that point. That is, as per section 11, read with notification 12 of 2017. Services by way of renting of residential property for residential purpose to an unregistered person is exempted. So registered individual they have given. So second exemption we need to write. Services by way of renting of residential property to registered individual for their family stay is exempted. Okay. So it is used for residence, for his personal residence. Due to that reason, it will be coming under exemption. It is exempted. So accordingly, you will not take any GST. Then one more transaction is given, input services paid to an unregistered GTA. So GTA service is covered under RCM, and GTA has two options. Either they can opt to pay GST under FCM, or they may not opt to pay GST under FCM, so RCM will be applicable. In this case, RCM only. Why? Because GTA is first of all unregistered, then naturally they cannot opt for FCM. What is the default option? In case of services provided by original literary by author to any person or GTA services, there are two options, FCM, RCM. But default option will be RCM. If they opt for FCM, then only it will be FCM. Okay. So here they cannot opt for FCM because they are unregistered. Naturally, it will be coming under RCM. Each individual consignment is carried in a single carriage less than 1,440. We don't have any exemption. So for GTA, we have only three exemptions. Number one, notified goods. It is not notified goods. Number two, so if the recipient is individual, HUF, AJP, trust, who are unregistered and not having factory, but JH is registered, and the recipient is government, which is registered only for deducting TDS, then also it is exempted, but recipient is not a government. So it will be taxable under RCM, which means who will pay GST in this case? Mr. Jayesh will pay. Means will it come in the tax liability of Jayesh? Yes, as invert supply under RCM. So GTA services 15,100. So total 1,89,600 is the value, because see the question. Compute the gross value of supplies on which GST payable by Mr. Jayesh. So 1,89,600. And for GTA, what is it you will write? As per section 9.3, read with notification 13 of 2017, goods transport agency services is covered under RCM. So in the present case, GTA cannot opt for FCM. So consequently, GST payable by Mr. Jayesh under RCM. Okay. Again, here explanations. So if it is a question given for 5 marks, usually it is a 5 marks question type. So you have to write the explanation. Only when you write explanation, at least you can expect 4 marks. If the explanation is too good and the answer is also correct, definitely they will give you 5 out of 5. I have seen the answer sheets. Yes, they will give. For presentation, they are really giving good marks. Okay. Next. Question number 5. Following are the particulars relating to one of the machines sold by SQM Limited to ACD Limited in the month of February 2020. at list price of 9,50,000 exclusive of taxes and discount. Further, the following additional amounts have been charged from ACD Limited. So, here 9,50,000 is the list price, means 9,50,000 will be taken as the transaction value, exclusive of tax and discounts. What is the meaning of this phrase? Exclusive. Exclusive means before taxes and before discount. Further, following additional amounts are being charged from ACD Limited. Municipal taxes chargeable on the mission. So, municipal taxes, what is the reference that we need to give? So, for section 15 also, please try to remember 5 clauses. 15(2)(a), taxes, duties and cess by whatever name called other than GST, if charged to recipient. 15(2)(b), supplier is liable to pay an amount, but which is paid by the recipient. Okay. Then 15(2)(c), that is supplier incurs the expenditure. Okay. So, second point is supplier is liable to pay. 15(2)(b), supplier is liable to pay which is incurred by recipient on behalf of supplier. Next one, supplier is liable to incur the expenses, he incurred it, and in turn it is recovered from the recipient before at the time of supply of goods or services. 15(2)(d), interest, late fee or penalty for delay in receipt of consideration. 15(2)(e), subsidies directly linked to the price other than from CG or SG. So, try to write these subclauses. Compared to others, your answer will stand out. Okay. So, 15(2)(a), for municipal taxes it is 15(2)(a), taxes. First, how you need to develop the explanation? As per 15 subsection 2 clause A of CGST Act, taxes, duties and cess by whatever name called other than GST shall be included in the value or to be included in the value in the given price. So, taxes is not included, hence it will form part of value, added, hence it will form part of value. So, we need to add that. So, like that explanation to be given, don't forget this. Outward freight charges. Contract was to deliver machine at ACD Limited's factory, that is FOR contract. Free on road contract means I have to deliver at my customer site. What is the opposite of free on road contract? X factory or X showroom contract. Okay. So, here it is free on road contract. This is an expenditure incurred by the supplier and charged to recipient before or at the time of supply of goods or services. As per section 15(2)(c), it is to be included in the value, and in the given price it is not included, therefore we need to add. So, why? Because it is exclusive of taxes, contract was to deliver, and nowhere it is given that this is included. Moreover, it is clearly mentioned following further additional amounts have been charged. So, it will form part of value. How you need to write the explanation? As per section 15 subsection 2 clause C, expenses incurred by supplier and charged to recipient before at the time of delivery of goods or supply of services to be included in the value. In the given price, it is not included, hence it will form part of value. Okay. Next, additional information. SQM Limited normally gives an interest-free credit period of 30 days for payment. After that, it charges interest at the rate of 1% per month or part thereof on the list price. So, usually they will be giving a interest-free credit period of 30 days. Thereafter, they will charge this interest. ACD Limited paid for the supply after 45 days. The credit period is 30 days, but it is after 45 days. But SQM Limited waived the interest payable. Now, in this case, interest is not required to be added, but we need to write the note. As per section 15, subsection 2, clause D, interest, late fee or penalty for delay in receipt of consideration to be included in the value only when the same is collected from the recipient, because the time of supply for interest as per 12(6) or 13(6) is the date on which interest is actually received. So, in the present case, as the interest is waived off, it will not be included in the value. Like that explanation we need to give. Then next, SQM Limited received 50,000 as subsidy from one NGO, not received from government, received from NGO on sale of such mission, and this subsidy was not linked to the price of the mission and also not considered in the list price of 9,50,000. So, it is subsidy directly linked or not directly linked? Not directly linked to the price. Subsidy not directly linked to the price will not form part of value. As per section 15 subsection 2 clause E, 15(2)(e), subsidy only direct link to the price is to be included in the present case, as the subsidy is not direct link to the price, hence it is to be ignored and shall not form part of value. So don't add or less, just ignore it, and you need to write the note for this. ACD Limited deducted discount of 15,000 at the time of final payment, which was not as per agreement. Now we need to give the reference of 15 subsection 3. As per section 15 subsection 3, discount given after supply is allowed as deduction provided the terms are agreed before at the time of supply. In the present case, the terms are not agreed before at the time of supply, and this post supply discount is not allowed as deduction. So don't take any adjustment. Then SQM Limited collected 9,500 as TCS under Income Tax Act. So here we need to give reference of 15(2)(a) plus CBIC circular. What does the CBIC circular says? As per section 15 subsection 2 clause A, any taxes, duties and sales by whatever name called other than GST should be included in the value. However, as per CBIC circular, TCS collected under Income Tax Act should not be included, as the same is not having the character of tax. And it is an interim levy because of that reason. Okay. So why it is interim levy? Because basically this is not an income tax. The other person's income tax we are not collecting, because it's a tax on his expenditure. So just to know the source of the income, TCS is being levied by the income tax department. So it's an interim levy. Okay. So therefore it is not required to be included, and in the given price it is not included because all this is additional information. All this is in addition to the price. Then compute the value of taxable supply as per the provisions of GST law, considering that the price is the sole consideration and both the parties are unrelated. So we need to write this. So only two additions. So 9,50,000 plus 45 plus 65, 10,60,000. But you will not get full marks if you are writing only this. You have to write the notes. So then only you can expect full marks in this. Then next, question number 6. Happy Constructions Limited. It's an RTP May 24. Happy Constructions Limited, a registered builder under GST in Bengaluru, Karnataka, has got permission to build 5 floors from the municipal projects for one of its projects at Surajnagar. Aditya Constructions, a neighboring housing project, approached Happy Constructions Limited to discuss regarding blockage of sunlight issue arising out of the construction of 5 floors and asked it to build only 3 floors, for which 20 lakhs was offered as compensation. Who is giving compensation? Aditya Constructions is giving to Happy Constructions a compensation of 20 lakhs. Happy Construction Limited agreed to the offer. They said happy. And it may be noted that Aditya Construction is not ready to pay any further amount to Happy Construction Limited in addition to the amount already agreed. Briefly explain with correct legal provision whether the amount received as compensation is liable to GST or not, and if considered as taxable, then calculate the total GST payable by Happy Constructions Limited. Assume the applicable rate of GST is 9% each. Also state the conditions to be complied with. So first of all, this should be via a contract. This compensation should be based on a contract. Contract entered by one person with the other person, wherein to do an act or not to do an act, for which if the amount is received, then only it will become supply, because we have a CBIC circular which says that any compensation which is received not arising out of contract will not be included in the value. So the compensation should be arising out of the contract. So that is one point. And next, this compensation should not be in the nature of penalizing a person to discourage the other person to do the act, like fines, penalties kind of. No. So here it is not that. Consequently, it will be chargeable to GST under consideration for not doing an act. Okay. So see this explanation: agreeing to the obligation to refrain from an act, that is not doing an act, or to tolerate an act, or a situation or to do an act. So doing an act, not doing an act, tolerating an act is specifically declared as supply of service as per 7 subsection 1 capital A read with schedule 2. Okay, it is given. And if the same constitutes supply under GST, first it should become supply, then only it will be supply of service. In the given case, Happy Construction Limited has agreed to build only 3 floors even though it is permitted to construct 5 floors for a compensation of 20 lakhs. This results in supply of service. The condition is that there should be expressed or implied agreement and the consideration should flow. And since Aditya Constructions is not ready to pay any further amount, so much of the amount paid is inclusive of GST. So whatever 20 lakhs collected, they are not going to pay any extra amount beyond that. Means that 20 lakhs is assumed to be inclusive of GST. Since Aditya Construction is not ready to pay any further amount to Happy Construction Limited, in addition to the amount already agreed, the amount received 20 lakhs shall be treated as inclusive of GST, and GST payable will be 20 lakhs into 18 by 118. Why sir 9 by 118? CGST. CGST, SGST each is 1,52,542. What you can do, you can directly calculate 20 lakhs into 18 by 118, you will get one number, then divided by 2, CGST, SGST, like that also you can present. Okay. So because if you see the question clearly given the applicable rate of CGST, SGST is 9% each. Sir, what about the place of supply? So here, place of supply will be general provisions only. Why general provisions? Because for this we don't have any specific provision. So general provisions needs to be taken, general provisions, B2B, location of recipient. So and it is given neighboring housing project. So therefore it is in the same state, that's why it is CGST, SGST. Let's move on to the next question, that is question number 7. Charm Limited, registered under GST in the state of Jharkhand, manufactures cosmetic products and appointed Mr. Handsome of Mumbai, who is registered under GST in the state of Maharashtra, as their Del Creditor agent. So Charm Limited is the principal and Mr. Handsome is the Del Creditor agent to sell their products. Being a Del Creditor agent, he agrees to raise invoices in his own name. So the Del Creditor agent is raising invoice in his own name, means the agent is acting on behalf of principal. So between the principal and agent, it will become supply under 7(1)(c). Okay. And also guarantees for realization of payment from customers to Charm Limited. So the advantage of Del Creditor agent to the principal is that first the Del Creditor agent will make the payment, thereafter the Del Creditor agent will recover the money from the customers. So because of it the Del Creditor agent will collect some extra income also, so the risk of bad debts is less and the Del Creditor agent will get extra interest. Then in order to realize the payments from customers on time, he extends short-term transaction-based loans to them and charges interest for the same. Who? Del Creditor agent. Mr. Handsome provides you the following details of the transactions carried out during the month of March 2022. This is the outward supply of Mr. Handsome, the Del Creditor agent. Goods sold by Handsome in the capacity of Del Creditor agent, as they are raising invoice on that value of goods, they need to pay GST. And it's an intrastate transaction, 2,80,000. Interest earned from above customers from short-term credit facility provided for timely payment of dues, intrastate transaction 20,000. So whenever the interest is collected by Del Creditor agent, we have a CBIC circular. If the Del Creditor agent is acting on behalf of principal, then in that case, whatever interest that is collected by Del Creditor agent will be included in the value of supply. So interest earned from the above customers for short-term credit facility provided for timely payment of dues 20,000. Then commission bill raised on Charm Limited. So as they are acting as an agent, so they need to get a commission also. So for which they are raising invoice on Charm Limited for the services provided 30,000. Then what is their inward supply? So the principal is sending the goods to Del Creditor agent. Interstate supply of goods received from Charm Limited, and that is supply under 7(1)(c) because it is without consideration. So we need to take the market value. Since being Del Creditor agent, no consideration was paid and the value under section 15 is 2 lakhs. So that is market value to be taken. Received training in marketing and distribution from Charm Limited as per DCA agreement free of cost. Company charges 75,000 for such training when they provide the same to others. Actually, it is not a supply. Why? As per section 7(1)(c), between principal and agent without consideration, only goods constitute supply, but if there is any services, it is not a supply. Because of that reason, applicable rate of tax on both inward and outward supplies is 9% each for CGST and SGST and 18% for IGST. Amount given above are exclusive of taxes wherever applicable. Subject to the information given above, necessary conditions are complied with for availment of ITC. You are required to calculate the gross GST liability and eligible input tax credit for the month of March 2022 of Mr. Handsome. Brief note should form part of your answer for treatment of items in serial number 1 to 5. So this you don't have to write in exam. So but I am just giving you the chart. So whenever you are getting confused as to what is it, in the rough you just draw the chart as to what is happening so that you will understand the clear-cut provision. So JAN' Limited is the principal, delegated agent is Mr. Handsome, and there are customers. So first Handsome is giving the goods to the customers, and Handsome is only raising invoice for 2,80,000. So as he is raising invoice, that will become supply in his hands, and he is an agent acting on behalf of principal. Now Handsome is collecting the price plus interest. This interest is on account of delay in receipt of consideration as per CBIC circular. It is not interest on account of loans, advances, deposits. So this interest is includable in value as per 15(2)(d). Now Handsome is getting the goods from JAN' Limited principal, that will become supply under 7(1)(c), and the value will be 2 lakhs, and this services which is provided by JAN' Limited to Handsome is not a supply. Okay. Now first we will see the gross GST payable by Mr. Handsome. What is the first transaction? Goods sold 2,80,000 intrastate. The rate of GST is 9%. So sale of goods 2,80,000 into 9%, 2,80,000 into 9%. Interest is includable in the value, and as it is includable in the value, the same rate which is applicable for the goods, that will be applicable for interest also, and it is definitely intra because the original transaction is intra. So 20,000 into 9%, 20,000 into 9% interest. But we need to give the explanation for this. So agent acting on behalf of principal. So as invoice is raised by the agent, it is chargeable to GST in the hands of the agent. Then as per CBIC circular, interest received by delegated agent from the customers is includable in the value because the delegated agent is raising invoice and acting on behalf of principal. Then next, third, commission. So he is raising invoice on JAN' Limited for the commission. 30,000 it is given as interest rate. So 30,000 into 18% interest rate. Now we got the gross GST payable. Now inward supply, if you see only one inward supply, that is 7(1)(c), principal to agent, 2 lakhs, and it is interstate, and this is not a supply, but we need to write the note. So here inward supply of principal 22 lakhs into 18, inward supply of service from principal not a supply, and we need to write the notes accordingly for that. Now this 36,000 can be utilized for payment of IGST liability, and the excess amount can be utilized for payment of CGST and SGST in any manner, any proportion. So equally we will divide, thereby net GST payable will be 11,700 and 11,700. Okay. Again, notes we need to write. One note is related to the agent, outward supply, then about the interest, then commission, then 7(1)(c) between principal and agent. Last, principal agent for services is not applicable under 7(1)(c). Next, question number 8. Royal Sweet Company, Delhi, a registered supplier, has furnished the details of the following few transactions which took place in November. So date 11/11, payment made to an advocate in Delhi, date of invoice 7/7, and amount 1,25,000. So we have, as per section 9 subsection 3, read with notification 13/2017, services provided by individual advocate or firm of advocate to a business entity is covered under RCM, where liability to pay GST is on the business entity. So accordingly, Royal Sweet Company is required to pay GST under RCM on this advocate services. Okay, and they are registered. So the exemption also not applicable. If it is given that Royal Sweet Company turnover during the previous year does not exceed threshold limit, then only we will take it as exempted. Now, what is the time of supply for this? As it is services covered under RCM, we need to determine the time of supply as per section 13 subsection 3. As per section 13 subsection 3, the time of supply will be the date on which payment is made to supplier. What is the date on which payment is made to supplier? 11/11, and 61st day from the date of invoice. So date of invoice is 7/7 and 61st day if you see. So here for the month of July, how many days? So we need 61st day. For the month of July, 31 minus 7 that is 24 July, and again August we have 31 days, that is 55, and in September we will take the balance days, that is 6th September. So 61st day is 6th September. 6th September is 61st day. So therefore 61st day the payment has to be like whichever is earlier is the time of supply. So 11/11 or 6/9, whichever is earlier, 6/9 is the time of supply, but the payment is made on 11/11. Next, so second transaction, paid sitting fees to director from Haryana for meeting held in Delhi. It's a interstate supply. Again, as per section 9 subsection 3, services provided by director to company or body corporate will be covered under RCM. So Royal Sweet Company is required to pay GST in this case. What is the time of supply? Date on which payment is made, 2011, or 61st day from invoice, whichever is earlier is 2011. So in this case 6th September, first case 6th September, next case 20 November is the time of supply. If 6th September is the time of supply, what is the due date of payment of GST? 20th of October. But when the GST is being paid, see below, you are required to compute GST as the case may be, either CGST, SGST or IGST as the case may be, payable for the month of November along with time of supply for the aforementioned activities. Now in this case, time of supply we determined, interest liability will arise. Why? Because they are going to pay it for the month of November. So month of November means by 20th December they will make the payment. So for 6th September due date is 20th October, 20th October to 20th December. You can see here interest computation. The due date of payment of tax in the first case is 20th October. Why? Because 6th September next month 20th. So that is 20th October is the due date of payment of tax for the first case with return of September. However, what is the actual date of payment? November they are paying. So November month 20th is 20th of December. So but we are taking here in this question that the tax is also paid on 11/11. So that is an assumption which they are taking. So because actually speaking for November month they need to discharge it by 20th of December. But here they are telling that the tax is also being paid on the same 11/11 and 20/11. So paid to advocate along with tax, paid sitting fees along with tax. That is the assumption that is taken in this. So due to that reason 11/11 is the date on which payment is made. Accordingly, interest will be computed for October 11 days, November 11 days, that is 22 days. Interest is computed at the rate of 18%. So 22,500. How 22,500? That is this amount 1,25,000 is there na. 1,25,000 into 18% is 22,500. So on 22,500 into 18% into 22 by 365, 244. So the 244 rupees is also payable as interest and it is given as intrastate. Why intrastate? They are also in Delhi, advocate is also in Delhi. Services provided by advocate, we don't have any specific provision for place of supply. So general provisions, we need to take location of recipient as a place of supply. Accordingly, it's an intrastate supply, CGST, SGST and the interest. Whereas director sitting fees, for director sitting fees, we need to take the due date as 20 November, the date of payment also 20 November. So due to that reason, there won't be any interest that is payable in this case. Just it is given as interest rate. So 75,000 into 18%, 13,500. And the time of supply will be 20 November only. So mainly this question is connected to time of supply and interest computation. Only one assumption that has been taken is that this is an exam question, like RTP question. They took 11/11 as the due date of payment of GST, that is date of payment of GST, but actually if nothing is given, you take 20th of next month as the date of payment of GST. This pertains to November, means November you will file 3B on 20th December, so 20th December will be taken, okay. So, but sir, if it is taken like this, is it error? No, it is not an error, it is just the view or assumption that has been taken here. Next, question number 9. Utsav Private Limited of Meghalaya, engaged in supply of gift items and repair services, provides you the following details. So they gave some details as to when they commence a business, when their aggregate turnover exceed 10 lakhs, when their aggregate turnover exceed 20 lakhs, and when they made application for registration, and when the registration certificate has been granted. The company seeks your advice as to how it should raise revised tax invoice for the supplies made. Is there any specific provision for issuance of revised tax invoice to unregistered customers? Listen carefully. Whenever they are making supplies in Meghalaya, MMTN, the limit will be 10 lakhs. Manipur, Mizoram, Tripura, Nagaland, not Meghalaya. Manipur, Mizoram, Tripura, Nagaland, the limit is 10 lakhs. And for use stamp states, Uttarakhand, Sikkim, Telangana, Arunachal Pradesh, and Puducherry, okay, and Meghalaya and Puducherry, it will be 20 lakhs. Meghalaya, 20 lakhs is the limit. Don't check 10 lakhs, 20 lakhs. Whenever a person is liable to get registered and they make application for registration within 30 days, from the date they are liable to get registered, the date on which they are liable to get registered is the effective date of registration. If the application is not made within 30 days from the date they are liable to get registered, then as and when they get the registration certificate, that is the effective date of registration. Accordingly here, turnover exceed 10 lakhs on 15th August, irrelevant. Turnover exceed 20 lakhs on 5th September, so 5th September is the date on which they are liable to get registered. And application for registration should be made within 30 days from 5th September. Application should be made within 30 days from 5th September. And in this case, so what is the date on which application is made? 28th September, so within 30 days. So what is the effective date of registration? Effective date of registration is 5th September. First that you need to write. So the effective date, first the provision about applicable threshold limit, okay. So as per section 22 subsection 1 of CGST Act, we need to write applicable threshold limit is 20 lakhs. So that is the first part as per section 22. Then we need to write effective date of registration. Application made within 30 days, application not made within 30 days, like that. In the present case, as the application is made within 30 days, the effective date of registration is 5th September. Now, revised tax invoice as per section 31 subsection 3 contains the provisions of revised tax invoice. All tax invoice provisions is 31. As per section 31 subsection 3, revised tax invoice to be issued within 1 month may be issued. Actually, revised tax invoice is not mandatory, but if it issued, may be issued within 1 month from the date of registration certificate for the supplies between the date they are liable to get registered, that is effective date of registration, till the certificate of registration. In the present case, for the supplies between 5th September to 6th October, outward supplies between 5th September to 6th October, they can give revised tax invoice within 1 month from 6th October, that is 6th November. Within 1 month from 6th October, they need to give revised tax invoice. Then, next, there is a concept of consolidated revised tax invoice. That is, for B2C customers, they don't have to give, for B2C customers, they don't have to give invoice wise. They can give consolidated revised tax invoices. So that consolidated revised tax invoices can be given if the value of supply does not exceed, okay. So 2,50,000, say this, Utsav may issue consolidated revised tax invoice in respect of all supplies made to unregistered during a period. However, in case of interstate supplies made to unregistered dealers, a consolidated revised tax invoice cannot be issued in respect of all the recipients located in a state if the value of supply exceeds 2,50,000. 2,50,000 if it exceeds cannot be issued. Okay. So that is with respect to this. And next, question number 10. It's an RTP May 24 question. From the following information provided by Sasta Bazaar, determine the time of supply for the purpose of payment of GST. So it issued coupon on 26 worth 2,000 redeemable against purchase of specific plastic items. The coupon was redeemed on 31/7/2023. As per section 12 subsection 4 and 13 subsection 4 of CGST Act, the time of supply in case of vouchers, if it is identifiable vouchers at the time of issuance of voucher, if it is not identifiable voucher at the time of redemption of voucher. So here identifiable or non-identifiable means if the voucher can be redeemed against a particular product or a particular service, it is identifiable voucher. If the voucher can be redeemed against any product or service, then it is non-identifiable voucher. So it issued a coupon on 26 worth 2,000 redeemable against purchase of specific plastic items. So identifiable voucher. The coupon was redeemed on 31/7/2023. So the date of issuance of voucher will be taken as the time of supply. So in this case 26/2023 is the time of supply. It issued a coupon on 1/8 worth 3,000 which is redeemable against purchase of any item. Any item means non-identifiable voucher. So the time of supply is at the time of redemption. What is the date at which is redeemed? 18/8. So first case it is 26. Now 18/8 will be taken as the time of supply. Then third, it received interest of 10,000 for late payment from a customer on 11/11 for supply of goods which was originally made on 24/6/2023. So in case of 12 subsection 6 and 13 subsection 6 of CGST Act, for interest, late fee, penalty on account of delay in receipt of consideration, the time of supply is as and when it is actually received. What is the date on which it is actually received? So the actual date on which it is received is 11/11/2023, that late fee. So 11/11/2023 is the time of supply. Then question number 11. Shivaji Private Limited, a registered supplier, supplies the following goods and services for construction of buildings and complexes. Excavators for required period at per hour rate. So they are supplying excavators, and manpower for operation of excavators at per day rate, soil testing and seismic evaluation at per sample rate. Okay. The excavators are invariably hired out along with operators. Similarly, excavator operators are supplied only when excavator is hired out. Actually, this line is given to convey that this hiring of excavators and supply of manpower for operating excavators is naturally bundled. See the wording again. The excavators are invariably hired out along with operators. Similarly, excavator operators are supplied only when the excavator is hired out. Okay. So it will be coming under naturally bundled. Then for the given month, the receipts exclusive of GST of Shivaji Private Limited are as follows. Hire charges for excavators 18 lakhs, service charges for supply of manpower for operation of excavator 20,000, service charges for soil testing and seismic evaluation at 3 sites 2,50,000. So this 18 lakhs and 20,000 together, if you see 18 lakh 20,000, this 18 lakh 20,000 chargeable to GST at the same rate because it is a naturally bundled. So what are the three conditions for composite supply? All the supplies should be taxable, naturally bundled in the ordinary course of business, and the principal supply should be identifiable. Both are taxable because hiring out of excavator 12%, manpower for excavator 18, both are taxable. Naturally bundled, it is given, and the principal supply is identifiable because hiring of excavators. So what is the rate of GST for hiring of excavators? 12%. So for these 18 lakhs and 20,000, 12% only applicable, you can see here. For 18 lakhs and 20,000, the rate will be 12%. Whereas this soil testing and seismic evaluation is an independent activity, no way connected to that. So it's a separate supply, chargeable to GST at the rate applicable to that separate supply. So for soil testing and seismic evaluation, it is 18%. So therefore, 2,50,000 into 18%, that will be 45,000. So the GST liability will be 2,63,400. Okay, and you need to write the note related to this. So this is a question on application of composite supply. Okay, and along with that liability we need to compute. Then question number 12. Answer the following questions. 1A. A hotel owner provided accommodation service in Haryana through an e-commerce operator, Cool Trips. The hotel owner is not liable to get registered as per the provisions of section 22. Who is the person liable to pay GST in this case? So in case of, as per section 9 subsection 5 of CGST Act, there are 4 notified services supplied through e-commerce operator. Liability to pay GST is on e-commerce operator. What are those 4 notified services? HATE. H for housekeeping services, A for accommodation services, T for transportation of passengers, and E for eating food in a restaurant. For these 4 services supplied through e-commerce operator, liability to pay GST is on e-commerce operator. For the first 2 services, H and A, housekeeping service and accommodation service, supplier should be unregistered. For the next 2 services, supplier may or may not be registered. Okay. In this case, it's accommodation service and the supplier is not registered. So definitely liability to pay GST is on e-commerce operator under section 9 subsection 5. So that is the answer you need to write. So as per section 9 subsection 5, accommodation services, if the supplier is not registered, is notified. Accordingly, in case of this services provided by hotel through Cool Trips, liability to pay GST is on e-commerce operator. Next, B. Would your answer be different if the e-commerce operator Cool Trips does not have physical presence in India? If the e-commerce operator is not having physical presence in India, then the liability to pay GST is on the representative who is there in India. If they don't have a representative also, they shall appoint a representative in India for the purpose of payment of GST. That we need to write. If they don't have a physical presence, the person liable to pay tax is the person representing the e-commerce operator Cool Trips for any purpose in India. Then 2. A. Mr. X, a Delhi resident, submits a cab request to Speed Cabs for travelling from Delhi to Gurgaon. Speed Cabs is a mobile application owned and managed by Speed Technologies Limited located in India. The application facilitates a potential customer to connect with the person providing cab service under the brand name of Speed Cabs. So basically, they are an e-commerce operator. Speed Cabs Limited is an e-commerce operator. So, no, Speed Technologies Limited is the e-commerce operator. Speed Cabs is the supplier and they will be connecting with the customer. After Mr. X pays the cab charges using his debit card, he gets the details of the driver, Mr. Y, and the cab registration number. With reference to GST, discuss who is liable to pay GST in this case. The liability to pay GST in this case is on e-commerce operator, because in case of transportation of passengers by any motor vehicle, the liability to pay GST is on e-commerce operator, whether the supplier is registered or unregistered, unless if it is supplied through omnibus by a company. Okay, so here it is normal cap. So liability to pay GST is on e-commerce operator, that is Speed Technologies Limited. So liability to pay GST is on Speed Technologies Limited, irrespective of whether the supplier is registered or not. Okay. So irrespective of whether the supplier is registered, irrespective of whether supplier is registered or not. Supplier, irrespective of whether supplier is registered or not, liability to pay GST is on e-commerce operator. What will be your answer if, okay, Speed Technologies Limited is located in New York and does not have a representative in India. That is, if the e-commerce operator don't have a representative in India, they shall appoint a representative in India for the purpose of payment of GST. They should appoint, okay. They shall appoint a representative in India for payment of GST. Then third, Mr. Y, Chennai, residents book omnibus motor vehicle greater than 6 passengers operated by XYZ Limited through Redbus, an e-commerce operator for transportation of their employees from one location to another. So in this case, transportation of passengers by omnibus. Omnibus means what? Motor vehicle greater than 6 passengers by XYZ Limited through Redbus, an e-commerce operator. Liability to pay GST is on e-commerce operator or company. It's not on the e-commerce operator because it's an exception. In case of transportation of passengers by omnibus, through omnibus by a company, liability to pay GST is on the company, XYZ Limited. So XYZ Limited is required to pay GST in this case, okay. So see the answer here. So transportation of passengers by e-commerce operator. However, the company is providing transportation of passengers in omnibus through e-commerce operator. It is not notified for 95. So liability to pay GST is on XYZ Limited. Will your answer be different if XYZ Limited, a partnership firm, is operating omnibus through e-commerce operator? Yes, the answer will change. In that case, the liability to pay GST is not on e-commerce operator, not on supplier, but on e-commerce operator, because the supplier is not a company, because only omnibus by company is covered under company, that is FCM. E-commerce operator will not pay, 95 will not come. But if the supplier is other than company, definitely e-commerce operator only will pay. In the second case, if supplier XYZ company is a partnership firm, then the liability to pay GST is on Redbus e-commerce operator, irrespective of whether XYZ and Co is registered or not, okay, whether the partnership firm is registered or not. Okay, now we will move on to the next question, that is question number 13. X Limited is located in Ludhiana. It is registered, GST registered with aggregate turnover of 20 crores. It is in the business of manufacture of cast glass. It has received the following services from different persons during December 2021. So what we need to answer in this is that discuss the applicability of reverse charge to above transactions. First, service by Department of Post by way of express parcel post, value of service is 40,000. So Department of Post, we don't have RCM, we have only FCM, and 3 cases it is exempted, that is postcard, inland letter or envelopes less than 10 grams is exempted. Other cases it will be taxable, and wherever it is taxable, it will come under FCM only. Department of Post is not covered under RCM, so RCM is not applicable. That's what you need to write. Then for transportation of goods, X Limited pays 1 lakh to Indian Railways. Indian Railways is now always covered under FCM, so there won't be any RCM with respect to Indian Railways. So service provided by Indian Railways is always covered under FCM, therefore RCM not applicable. Next, X Limited GST registered has taken a commercial property on rent from Punjab government, for which the company pays rent of 2 lakhs. So renting of immobile property by government to registered business entity is covered under RCM. If the business entity is unregistered, then it will be FCM, but here it will be RCM. So therefore, in this case, X Limited is required to pay GST. RCM applicable to this service, recipient shall be liable to pay GST. Then X Limited has taken security services for factory complex from the Mumbai government, for which payment of 50,000 is made. So security services for factory complex. So this will be covered under RCM only again, because for security services we don't have any exemption, and moreover it is provided by government to X Limited. So it will come under RCM, where recipient X Limited is liable to pay GST. Okay. Then next one, X Limited has taken security service for office from Task Force Security Limited, a private security company, for which payment of 95,000 is made. So security agency services provided by government to business entity is only RCM. But normal security agency, if you see, two conditions should be satisfied for RCM. Supplier should be other than body corporate, and recipient should be registered but not opting for composition scheme and not registered only for deducting TDS. Here if you see, supplier should be other than body corporate, but here supplier is body corporate. That's why it will not be covered under RCM, it will be FCM. RCM not applicable, as supplier of security service is a body corporate. Okay. So that is the answer for this question number 13. Then question number 14, discuss whether the following supplies are intrastate supply or interstate supply. HDFC Bank Incorporated outside India has opened up a branch in Delhi, India, and providing services to customers in Delhi. For banking services, we don't have any specific provisions in place of supply. So general provisions will be applicable, that is location of recipient if it is B2B, and location of recipient in the records of supplier if it is B2C, otherwise location of supplier. So HDFC Bank has opened up a branch in Delhi, India. So supplier in India and providing services to customers in Delhi. Customers or account holders mean their details will be available. So Delhi and Delhi. So place of supply is Delhi as per section 12, and the nature of supply will be intrastate. How you need to write? First you need to write, in case of banking services as per section 12 subsection 2. General provisions will be always 12 subsection 2. As per section 12 subsection 2, place of supply. In case of supply to registered person is the location of recipient. In case of supply to unregistered person, location of recipient in the records of supplier. In the present case, the customers are account holders, so their details are available with the bank, and the location of recipient is Delhi, and that is the place of supply. Also, as per section 8 of IGST Act, if location of supplier and place of supply is in the same state or same union territory, then it will be intrastate supply. So that is what we need to write. Okay. So in this case, it will be treated as intrastate supply, section 8 reference we need to give. Then HDFC Bank Incorporated outside India has formed a subsidiary company in Mumbai and is providing service to customers in Delhi. Again, place of supply is same. Delhi will be taken as a place of supply, and the nature of supply will be interstate. So interstate means it will be chargeable to IGST. So here, where is the subsidiary company located? In Mumbai. So therefore, that supplier is Mumbai and place of supply Delhi, it will be interstate supply as per section 7. So as location of supplier and place of supply is different state, it is interstate supply. So that is this answer for 14 question. 15, Granites Textiles Limited purchased a needle detecting machine on 8 July 2017 from Makija Engineering Works Limited for rupees 10 lakhs excluding GST, paying GST at the rate of 18% on the same. So they purchased the machine. Machine is usually capitalized, which means it will be coming under capital goods. It availed the ITC of GST paid on the machine and started using it for manufacture of goods. So they availed the ITC. The machine was sold on 22nd October for rupees 7,50,000 excluding GST as second hand machine to LT Private Limited. The GST rate on supply of machine is 18%. State the action which Granites Textiles Limited is required to take, if any, in accordance with the statutory GST provisions on the sale of second hand machine. So as per section 18 subsection 6 of CGST Act, if any capital goods are purchased on which ITC is availed, yes, they avail the ITC and is supplied, then GST payable shall be A, ITC availed minus 5% for every quarter or part thereof from the date of purchase till the date of supply, or GST payable on the value of supply of such capital goods, whichever is higher. Okay, whichever is higher. In this case, section 18 provides that if capital goods on which ITC is availed, highest of the following. So provision first we need to write, then application of provision. So what is that? What is the ITC availed? 10 lakhs into 18%, 1,80,000 minus 5% into number of quarters. What is the date on which it is purchased? 8 July 2017 and it is sold on 22nd October 2018. So July means July, August, September 1 quarter, October, November, December 1 quarter. So in 2017 2 quarters, in 2018 till October, Jan, Feb, March, April, May, June, July, August, September, October. So 6 quarters. So 5% into 6 quarters we need to reduce. So see this, 3 quarters in 17, 18, 18, 19, 3 quarters, So 1 lakh 80 into 5%, 1 lakh 80 into 5%. So this amount needs to be reduced. 54,000 needs to be reduced. So 1 lakh 80,000 minus 54,000. So amount required to be paid is 1 lakh 26,000, or GST on sale value. What is the sale value of that capital goods? 7 lakh 50 excluding GST 18%. So 7 lakh 50 into 18%, 1 lakh 35, whichever is higher. Whichever is higher is 1 lakh 35,000. And what will be your answer if this machine is sold as scrap? Same. Only 3 goods if sold as scrap, we need to take GST on sale value. We should not apply this ARB, whichever is higher. What are those 3? Refractory bricks, molds and dies, and jigs and fixtures, which are supplied as scrap. Then ignore A point, just B, that is GST on sale value will be the GST payable as per 18.6. And moreover 18.6, this will be applicable only in case of capital goods on which ITC is available. Suppose if it is not capital goods, or if capital goods ITC is not available, normal sale value into GST. Next, question number 16. Cloud 7 Private Limited, a registered supplier, is engaged in manufacture of taxable goods. The company provides the following information pertaining to GST paid on the purchases made or input service available by it during the month of February. Now they gave some data. Determine the amount of ITC available to Cloud 7 Private Limited, that is blocked credits we need to check, and by giving necessary explanation for the treatment of various items, and all conditions necessary for availment of ITC have been fulfilled. First, trucks used for transportation of raw material. We need to write motor vehicles other than used for transportation of persons is not covered under blocked credits. Okay, not covered under block credits under section 17 subsection 5, and it is used in the course or furtherance of business. Consequently, ITC available. So 1 lakh 20 ITC available. Food and beverages for consumption of employees working in the factory. So food and beverages. So can we take ITC with respect to food and beverages? No, blocked credit. Food and beverages is blocked credit, and we need to write as per section 17 subsection 5, food and beverages are block credit and not covered under exceptions. Exception, there is no exception. There are 3 exceptions. Exception number 1, inward supply, outward supply, same category. No, they are not into the business of sale of food and beverages. Number 2, inward supply part of outward supply. No. Statutory obligation. No. So due to that reason, ITC not available on this 40,000. Then inputs are to be received in 5 lots, out of which 3rd lot was received during the month. So what is it? We will write, when goods are received in lots or installments, ITC can be availed on receipt of last lot or last installment. So accordingly, 80,000 rupees, we can avail the ITC only in the last lot, but we have received 3rd lot this month, so we cannot avail ITC. Like that explanation we need to write. Next, membership of a club availed for employees working in the factory. So we need to write as per section 17 subsection 5, membership of a club, health and fitness center is block credit. However, if it is under a statutory obligation, ITC available. In the present case, it is not under statutory obligation, so ITC not available. Okay. So 1 lakh 50 ITC not available. So far, if you see, only on trucks ITC available, all the other cases ITC not available. Then capital goods, out of 5 items, invoice for 1 item was missing and GST paid on that item was 50,000 rupees. Now what we need to do in that case, that is, whenever capital goods are purchased, and on purchase of that capital goods, if invoice is missing, one of the condition for availment of ITC is that a person availing ITC. So you need to write like this. As per section 16 of CGST Act, one of the condition for availment of ITC is that the person availing ITC should be in possession of tax paid document. In the present case, as tax invoice is missing, ITC not available. Okay. So only 3,50,000 you take. 50,000 cannot be taken. Raw material to be received in March. So raw material, right now we are doing the computation for February. Again you need to write this. As per section 16, one of the condition for availment of ITC is that the goods or services should have been actually received. In the present case, as the goods are received in March, so ITC not available in February. So 1,50,000 cannot be taken. So 3,50,000 plus 20, 4 lakh 70. But we need to write the explanation for each and every point in the answer. Okay. Next, question number 17. Question number 17 is related to computation of, you can see here, you are required to determine the eligible ITC and amount of net minimum GST to be paid in cash by Vishnu Limited for the month of Feb 2024. So it is a net GST payable, that is a computation here. So first, as per the CGST Act, Vishnu Limited was not mandatorily required to get registered. They are not required to get registered. However, it opted for voluntary registration, section 18(1)(b). A person is not required to get registered but voluntarily obtain registration as per section 18(1)(b). They can avail the ITC on inputs as such held in stock, inputs in WIP held in stock, inputs in FG held in stock immediately before the date of registration certificate. But those inputs should have been purchased within 1 year prior. Capital goods they cannot take, only inputs they can take. That input should be purchased within 1 year prior and it can be availed as ITC by filing form GST ITC 1. Now see, when are they getting registration certificate? And applied for registration on 12th February, registration certificate has been granted by department on 24th February 2024. So we need to take the closing stock as on 23rd February. Vishnu Limited is not engaged in making any interstate outward taxable supply. The CGST and SGST liability for the month of February 2024 is 31,000 each. So they have a liability of 31,000 each. Vishnu Limited provides the following information of goods held in stock on 23rd February 2024. Capital goods procured on 5th February 2024, rate of CGST and SGST at 6% each, being intra-state supply 2 lakhs. So now 5th February 2024 is within 1 year prior to 23rd February, yes, and we cannot take ITC. Why? Capital goods. Under 18(1)(b) we cannot avail ITC on capital goods. So that is what we need to write. So see this, capital goods nil, ITC cannot be availed. Okay. Next, inputs contained in finished goods stock were procured on 13th February 2023. Is 13th February 2023 within 1 year prior to 23rd February 2023? No, it is beyond 1 year, beyond 1 year. So on this 3 lakhs ITC cannot be availed. ITC cannot be availed because it is purchased beyond 1 year. So ITC not available. Okay, nil. Next, but explanation, that is the paragraph about 18(1)(b), if you write, that itself is sufficient. Next, value of inputs received on 10th October 2023 for 23rd February 2024. 10th October 2023, yes, it is within 1 year, contained in semi-finished goods. Yes, we can avail ITC 2,50,000, but we don't know whether these amounts are inclusive of GST or exclusive of GST. In the absence of information, we'll take these amounts as exclusive of GST only. Okay, so 2,50,000 into 6%, 6%, CGST, SGST. Okay, so therefore you can see here 2,50,000 into 6% and 6%, 15,000 and 15,000. That is on 10th October 2023. Then next, inputs procured on 1st February 2024. Yes, it is within 1 year prior. Lying in stock of semi-finished goods being intra-state supply. Can we take ITC with respect to this? Yes, we can take ITC with respect to this. So 1,50,000 into 7.5% and 7.5%, that is 11,250, 11,250. Next, input procured on 8th February 2024, that is also within 1 year. Lying in finished goods, we can take ITC 60,000 into 18%, IGST 10,800. So 26,250, 26,250 and 10,800, we will avail ITC. Now for February month, what is the liability? 31,000 CGST, 31,000 is SGST. So IGST credit should be first utilized for payment of CGST or IGST, IGST. Thereafter we will use it for payment of CGST, SGST. Here IGST credit is 10,800, but we don't have IGST liability. So equally we will divide between CGST and SGST, 5,400, 5,400. Thereafter, CGST credit, SGST credit you will set off and you will not have any GST liability. Okay. so that you can utilize for payment of your, because liability is exactly 31,000. Here 25,600. So 26 plus 5, 31, exactly liability becomes 0. If there is any excess credit, one more row you need to write. The excess ITC carried forward like that. Then, so this is a question purely on 18(1)(b). Look into the next one. AB Limited, a registered company in Chennai, Tamil Nadu, has provided following services for the month of October 2021. Service of transportation of students, faculty and staff from home to college and back to Commerce College, providing degree courses. So is it service provided by education institution or to education institution? It is to education institution, because we are providing the services of transportation of students to college. And in case of service provided to education institution, transportation, security and housekeeping within the premise and catering only to category 1, that is up to 12th standard or equivalent, is only exempted. For college it is not exempted, so consequently this 2,50,000 will be taxable. What is the explanation that you will write? As per section 11 read with notification 12 of 2017, transportation service provided to educational institution up to 12th standard or equivalent is only exempted. However, in the present case, college is not an education institution up to 12th standard, consequently it will be taxable. Okay. Then next, online monthly magazine containing question bank and latest updates in law to students of Peker Law College, offering degree courses in LLB and LLM. So online educational journals and periodicals to category 2 is exempted. So what is that you will write? As per section 11 read with notification 12 of 2017, supply of online educational journals and periodicals to education institution providing education as a part of curriculum, okay, qualification for obtaining a qualification recognized by law is exempted. Accordingly, online magazine supplied to college, Peker Law College, is exempted. So on this 1 lakh there is no GST. Then housekeeping services to T Coaching Institute. Housekeeping service provided to education institution up to 12th standard is exempted. However, to a coaching center is not exempted. Consequently, it will be taxable. So 50,000 will be taxable. Security services provided to N higher secondary school. Yes. Security services provided to education institution up to 12th standard is exempted. Consequently, services to N higher secondary school is exempted. So 3,25,000 no GST. Then service providing breakfast, lunch and dinner to students of ABC Medical College, offering degree courses recognized by law in medical field. Again, catering service to education institution up to 12th standard is exempted, but medical college is not an education institution up to 12th standard. So this breakfast, lunch and dinner provided to the medical college is taxable. So 5,80,000 will be taxable. So 2,50,000, then this 50,000 and 5,80,000. You have to write the explanation, and if you total, that is the value of taxable supplies of AB Limited. Okay. So if you know the provision, definitely you will get the answer. Next question, question number 19. Mr. Dhanwan, an individual registered supplier of Ahmedabad, Gujarat, received the following amount towards rendering of the intrastate supply of various services in the month of January 2023. Consideration received from security and housekeeping service provided to Holy Foundation, an education institution providing service by way of preschool education outside the school premises on its annual day function. See, basically security and housekeeping services provided within the premises is only exempted. If it is outside the premises, definitely it will be taxable. Okay. Here they are providing security and housekeeping services outside the school premises. Due to that reason, this 60,000 will be taxable. Okay. First you need to write the provision. Security and housekeeping services provided to education institution up to 12th standard is exempted if the service is provided within their premises. In the present case, as a service is provided outside the premises, consequently it will be taxable. So accordingly, this 60,000 will be taxable. And FCM or RCM, definitely it will be FCM. We don't have any RCM in this case. You are required to compute the value of supply on which GST is payable or to be paid by Mr. Dhanwan for the month of Jan 2023. All amounts are exclusive of GST wherever applicable. Then second point, amount received as a honorarium for participation as guest anchor on Apna TV in relation to a debate. As per CBIC circular, remuneration received by the guest anchor is taxable, and if their turnover does not exceed threshold limit, they are not required to pay GST, but the service will be taxable. So in this case, 2,25,000 will be taxable, and we don't have RCM, so FCM only. Then sum received as hiring charges for provision of non-AC contract carriage for transportation of employees to and from work to Siddhi Private Limited, a registered person under the GST. Such hiring is for 3 months. Use of the contract carriage is at the disposal of the company. There is a difference between contract carriage and renting of motor vehicle. Suppose if the contract carriage is given where on a predetermined route on a predetermined schedule, then it is contract carriage other than tourism or hire, and being non-AC it will be exempted. But it is not on a predetermined route on a predetermined schedule. Suppose if the vehicle is at the disposal of the recipient, okay, for a particular trip or a particular voyage, then it is contract carriage on hire, and when it is contract carriage on hire, it will be taxable and FCM only. Suppose if it is given for a period of time and it is at the disposal of the recipient, then it will be renting of motor vehicles. And in case of renting of motor vehicles, we need to check 3 conditions. Supplier other than body corporate, yes. Recipient should be body corporate, yes. And the rate of GST should be 5%. Then it will be covered under RCM. Okay. So this 1,50,000 will come under RCM, but we don't have the rate information in the question. That's the reason why we cannot apply that particular clarification, because the rate is not given. The rate should be 5%. Then what it is considered as contract carriage on hire or tourism. Contract carriage, non-AC contract carriage for hire or tourism, it will be taxable. Sir, won't it be covered under renting a motor vehicle? That's what, it will be coming, but the rate is not given. So we cannot bring it under RCM for renting of motor vehicles. Okay. Then, but in exam, what if the rate of GST is 5% like that it is given? Definitely it is possible to keep it under RCM. Okay. So here you can see sum received as hiring charges for providing non-AC contract carriage for transportation of employees to and from work. Use of contract carriage is at the disposal of the company. It's a non-AC contract carriage for hire. It will come under hire. So therefore it will be taxable. Even it will come under renting, yes, it will come under renting also. But why we are not taking RCM? 3 conditions. All 3 conditions should be satisfied. Next, amount received from provision of training in relation to recreation activities of music. So training in music by an individual is exempted. So this 90,000 will be exempted. So service by way of training in recreation activities relating to arts or culture by individual is exempted. Then renting of residential flat to Mr. Sahil, proprietor of Messrs. Dayaram and Sons, a registered person under GST, for the purpose of his own residence in personal capacity. So what is your answer for this 30,000? Is it taxable or is it exempted? So this 30,000 renting of residential flat to Sahil, proprietor of Dayaram and Sons, a registered person, for the purpose of his own residence. Okay. And in this case, it will be coming under exempted. Why? Renting of residential property for residential purpose to a registered individual for his family stay, under that category, the 30,000 will become exempted. So consequently, we need to add what are the amounts which are taxable. So 60, 2,25,000, 1,50,000. So the value of taxable supply will be 4,35,000. Okay. So look into question number 20. Examine whether the supplier is liable to get registered in the following independent cases. Raghava of Assam is exclusively engaged in intrastate taxable supply of ready-made garments. His turnover in the current financial year from Assam showroom is 28 lakhs. He has another showroom in Tripura with a turnover of 11 lakhs in the current financial year. So when a person is doing business in multiple states and one of the state is a special category state, what are the 4 special category states? Manipur, Mizoram, Tripura, Nagaland, and taxable supplies are made from that state, then the limit will be 10 lakhs. In this case, he is doing business in Assam and Tripura. Tripura is a special category state and taxable supplies are made, therefore the applicable threshold limit will be 10 lakhs. In the present case, their aggregate turnover is 28 plus 11, that is 39 lakhs, and as the applicable threshold limit is 10 lakhs, it exceeds, aggregate turnover exceeds applicable threshold limit, they are required to get registered, and they should be registered in both Assam and Tripura. That is the answer. So here what we need to write, first point is exclusively engaged in intrastate taxable supply of ready-made garments, and applicable threshold limit in case of this person is 10 lakhs. Thus Raghav is liable to get registered under GST as his turnover exceed 10 lakhs. Further, he is required to obtain registration in both Assam and Tripura as he is making taxable supplies from both the states. Then second, Pulkit of Panjim, Goa is exclusively engaged in intrastate taxable supply of shoes. Intrastate taxable supply of shoes. His aggregate turnover in the current financial year is 22 lakhs. When a person is doing business only in one state and that one state is not in MMT and use stamp and is exclusively engaged in supply of goods, then the limit will be 40 lakhs. But here the turnover is only 20 lakhs, so therefore they are not required to get registered. So applicable limit is 40 lakhs, not required to get registered as turnover does not exceed threshold limit. Then next, Harshit of Himachal Pradesh is exclusively engaged in intrastate supply of pan masala, and his aggregate turnover in the current financial year is 24 lakhs. So Himachal Pradesh, if a person is exclusively engaged in notified goods, pan masala, tobacco products, ice cream, edible ice, bricks and roofing tiles, the limit of 40 lakhs will not be applicable, the limit will be 20 lakhs. So here it is 24 lakhs, it exceeds 20 lakhs, therefore that person is required to get registered. If a person is engaged in supply of pan masala, the limit will be 20 lakhs, hence Harshit is liable to get registered. 4. Ankit of Assam is exclusively engaged in intrastate supply of taxable services. For a service provider, the limit will be always 20 lakhs. His aggregate turnover in the current financial year is 25 lakhs and it exceeds 20 lakhs, therefore that person is required to get registered. What if this is not Assam but Manipur, Mizoram, Tripura, Nagaland? Then 10 lakhs. For service also 10 lakhs only is the limit for 4 states. Then Sanchit of Assam is engaged in intrastate supply of both taxable goods and services. His aggregate turnover in the current financial year is 30 lakhs. Aggregate turnover is 30 lakhs, it does not exceed 40 lakhs. But the problem here is that both goods and services, not exclusively engaged in supply of goods. So due to that reason, again the limit will be 20 lakhs and Sanchit is liable to get registered in this case. So first you need to write about what is the applicable threshold limit. Total 6 points we need to write. That is, if they are doing business in single state and that state is in Manipur, Mizoram, Tripura, Nagaland, the limit will be 10 lakhs. If that state is in Uttarakhand, Sikkim, then Telangana, Arunachal Pradesh, Meghalaya and Puducherry, then the limit will be 20 lakhs. In other states, if they are exclusively engaged in supply of goods, 40 lakhs, and in other cases it will be 20 lakhs. If they are doing business in multiple states, point number 1, that is, if one of the state is in special category state and taxable supplies are made from the state, then the limit will be 10 lakhs. If none of the states is in MMT and use stamp and they are exclusively engaged in supply of goods, 40 lakhs. In all other cases, it will be 20 lakhs. Like that we need to write. After writing that, you need to apply and you need to answer. Next, question number 21. Nesamani started his business activities in the month of February 2022 in the state of Orissa. He provided the following details. Outward supply of petrol intrastate 4 lakhs. And what is it we need to do in this case? From the information given above, compute the aggregate turnover of Nesamani and also decide whether he is required to get registered. So this is aggregate turnover for registration, because aggregate turnover for composition scheme is different from aggregate turnover for registration. For aggregate turnover for registration, it is simple. All 4 will come: taxable, exempted, non-taxable, zero rated. Inward supplies under RCM will not come. Even taxes also will not be coming. So petrol is non-taxable supply. Yes, it will be taken. Exempted supplies will be taken. Outward supply of taxable goods by his branch in Uttar Pradesh, that will also be taken. Outward supply of service on which tax is payable under RCM. So my outward supply on which my recipient will pay GST under RCM should also be taken. But inward supply on which tax is payable under RCM should not be taken. Except this 2 lakhs, everything else should be taken, that is 17 lakhs. And this person is making all intrastate supplies. Interstate is only exempted, not taxable. and he is doing business in which state? Orissa and Uttar Pradesh. So therefore the applicable threshold, and they are exclusively engaged in supply of goods. No, both supply of goods and services. So the limit will be 20 lakhs, and in this case it is 17 lakhs. And as their aggregate turnover, it does not exceed 20 lakhs, they are not required to get registered. However, if a person is having inward supply on which they need to pay GST and RCM, they are compulsorily required to get registered. So section 24 overrides section 22. So they are compulsorily required to get registered under section 24. So person having inward supply on which they are liable to pay GST and RCM is compulsorily required to get registered. Next, question number 22. Mr. Ayushman, a registered person having intrastate aggregate turnover of 1.2 crores in the preceding financial year, did not file GSTR 3B for the month of September 2021 by 10 November 2021. So actually for September 2021 the due date is 20th October, but they filed on 10th November. The amount of tax payable for the month of September is 8 lakhs. All his supplies are intrastate supplies. Is there any late fee payable for the same? If yes, what is the amount of late fee? So the late fee payable for delay in filing GSTR 3B is 25 rupees for every day. It's not a nil return. So 25 rupees for every day, and their turnover during the previous year is 1.2 crores. It does not exceed 1.5 crores. The maximum late fee will be 1000. So 25 rupees per day subject to maximum 1000. If it exceeds 1.5 and if it does not exceed 5, then it will be 2500. If it exceeds 5 crores, then it will be 5000. Okay. So here the maximum is 1000. So how many days delay? So September it is 20th October. In October 11 days, November 10 days, so 21 days. 21 into 25, 525 rupees subject to maximum 1000. So 525 under each CGST and SGST. So 525 we need to pay under CGST, 525 we need to pay under SGST. Next, will your answer be different in A if Mr. Ayushman has intrastate aggregate turnover of 5 crores in the preceding financial year? So if their aggregate turnover is exactly 5 crores, not exceeding 5 crores, then it will be maximum 2500. Still the answer will remain the same, but maximum will be 5000. Okay. Next, will your answer be different in A if the total amount of tax payable in 3B for the month of September is nil? Yes, in case of nil return, the late fee will be 10 rupees per day subject to maximum, okay, 250 under CGST, 250 under SGST. So 10 rupees into 21, 210, maximum 250 only. So 210 rupees will be taken as the late fee. So this is a question on late fee. So for delay in filing return, section 47. Section 47 contains the provisions relating to late fee. Okay, section 47. Next, question number 23. Raghav Limited have filed their GSTR 3B for the month of July 2021 within the due date prescribed under section 39, that is 20th August. Yes, for July the due date of 3B is 20th August. Post filing the return, the registered person has noticed during September that the tax dues for the month of July have been short paid for 40,000. So means they have not paid 40,000 rupees of liability of September. Okay, no, for July, which they noticed in September. Raghav Limited has paid the above shortfall of 40,000 through GSTR 3B of September, but how much is paid through cash ledger? 30,000, and how much is paid through credit ledger? 10,000. Examine the interest payable under CGST Act. So here in this case, the interest is computed on entire 40,000 because this 40,000 pertains to July. 3B already filed for July. Now we are making the payment. So interest is computed on gross amount. Suppose if 3B not filed and 3B filed late, then interest is on net liability, but here it is on gross amount, that is 40,000. Then, so 40,000 rupees interest calculated at the rate of 18% from which date to which date? From the due date. What is the due date? 20th August till the date on which they are paying or filing return, 20th October. So in August 11 days, September 30 days, 41, October 20 days. So total for 60 days. Okay. So sorry, for the August, 20th August means 11 days in August, and September 30 days, and in October 20 days, so that will come to 61 days. So we need to count for 61 days actually. So see this, interest will be payable from which date to which date? 21st August to 20th October, 61 days. It is not 60 days because August also should be counted. Okay. So 20th is the due date, na? So 21st. So 61 divided by 365, that will be taken as the answer. Then next one, suppose what would be your answer if GSTR 3B for the month of July 2021 has been filed belatedly on 20th October 2021 and the self-assessed tax of 40,000 has been paid on 20th October. Suppose if July return is filed late, then we need to compute only on net liability, that is that much of the amount paid through cash ledger. What is the amount paid through cash ledger? 30,000. So we need to compute only on 30,000. 30,000 into 18%, number of days delay. So we need to compute accordingly. So 30,000 into 18%, and from which date to which date? Same, 21st August to 20th October. So for 61 days, we need to compute the interest only on 30,000 because there is a delay in filing GSTR 3B. So in case when there is a delay in filing GSTR 3B, we need to compute interest from the date after, that is the date after due date, means that date also should be counted till the actual date of payment. Okay, that's the answer for this. There exists adequate balance in cash and credit ledger as on 31/7, let it be, and no other supply has been made nor tax paid for the month of July other than 40,000, missed out to be paid on forward charge. Ignore the effect of leap year, and of course we ignored, we did not take, and moreover 2021 where we have leap year. So that is this. Next, question number 24. GSTR 3B for the month of January 2024 has been filed by Messrs. Avisha Limited, a registered person, within the due date prescribed by the CGST Act 2017, which is on February 20th, 2024. It came to the notice of the company that the tax due for the month of January has been paid short by 16,000. So 16,000 shortfall. The shortfall of 16,000 has been paid through cash ledger and credit ledger at the time of filing 3B for the month of February in the following manner. So 12,000 and 4,000. Assume that the electronic cash ledger and credit ledger carry sufficient balance for the above shortfall. You are required to calculate the amount of interest payable, if any, under section 50. So what happened? They have paid short by 16,000. So 16,000 they have not paid, and you need to compute the interest. So interest will be computed on entire 16,000. Why 16,000? See, it is short payment, already return has been filed. So 16,000 total amount we need to compute, and therefore on 16,000 from which date to which date? From 21st February. So in February 2024, so we'll take 9 days in February, and again has been paid on which date? March 20. So for the month of February, it is paid on March 20. So which means 20 days in March. So for 29 days, we need to compute the interest. So 29 days from 21st February to 30th March. Okay, 20th March. And 366 days you take in the denominator. Don't take 365, take 366 because it's a leap year. In numerator we have taken 9 days, so in denominator it should be 366 days. Also, give the effective GSTR 3B for the month of January has been filed belatedly on March 20. Normal, we will compute only on the cash ledger, same as above, but for leap year computation I gave you this question. So 12,000 into 18% into 29 by 366. Okay, that's the answer. So previous question and this question is same, but only difference is that in previous question that leap year adjustment is not there, here leap year adjustment is there, but otherwise everything is same. Then looking into question number 25, Agni Limited, a registered supplier, wishes to transport cargo by road between two cities situated at a distance of 368 kilometers. Calculate the validity period of e-way bill under rule 138 of CGST rules for transportation of the said cargo. if it is over dimensional cargo or otherwise. So how to count the validity of e-way bill? 1 day for every 200 kilometers or part thereof. So here in this case, so we need to count 368 kilometers means the validity will be 2 days for every 200 kilometers or part thereof, so 2 days. If it is over dimensional cargo, the validity will be 1 day for every 20 kilometer or part thereof, so 368 divided by 20, so that will be coming to 18.4, so we need to take it as 19 days. So 19 days if it is over dimensional cargo, and if it is normal it will be 2 days. This is the validity of e-way bill. So over dimensional cargo or multi-mode transportation, where one leg of the journey is by waterways, it will be 1 day for every 20 kilometers or part thereof. Then question number 26. Sapna Education Private Limited is receiving supplies through E-com Limited, e-commerce operator, has provided the following supplies during December 2020 through E-com Limited. So Sapna Education Private Limited is receiving the supplies through E-com Limited, and these supplies are provided through their platform. Supplies of goods taxable at 12% by registered supplier. So supply of goods taxable at 12% means some other supplier who is supplying through this platform. Okay. Now what is the question? Determine the amount of TCS by E-com Limited. So whenever the supplier is registered, yes, supplier is registered and supplier is making taxable supplies through e-commerce operator, TCS will be payable at the rate of 1% on net value of taxable supplies. What is the net value of taxable supplies? Supply minus returns. So 5 lakh minus 50,000, 4 lakh 50,000. Supply of goods taxable at nil rate by registered supplier. If it is nil rate by registered supplier, so as the supplier is registered but the supplies are nil rate, TCS will not be applicable in this case. Supply of housekeeping service by unregistered supplier. When the supplier is unregistered and providing housekeeping services, that is covered under 9.5, where liability to pay GST is on e-commerce operator. Wherever 9.5 comes, TCS will not be applicable in that case. Then supply of other services by registered supplier. So supplier is registered and other services, and TCS will be applicable in this case. So 1,50,000. And what is the total amount on which TCS is computed? 6 lakhs. And what is the rate of TCS? 1%. So for May exams onwards, it will be 0.5%. They reduce the TCS rate to 0.5% for May exam onwards, but for JAN'25 exam, it is 1%. So 1% is the rate of TCS, and 6,000 will be the amount of TCS. That is the answer for the first part. Second part. Determine the consequence if the said amount is paid and the return is filed on 15/1. What is this month for which we are paying TCS? December 2020. As per section 52, the time limit for filing TCS or paying TCS is 10th of the month following every month. So December, the due date is 10th of January. So there is a delay by 5 days. So 5 days into, like 5 days delay. For every day delay, late fee will be payable, that is 100 rupees per day subject to maximum 5,000. For TCS, the late fee is 100 rupees per day under each act, subject to maximum 5,000. So 5 days delay, 5 into 100, 500, subject to maximum 5,000. So 500 plus 500, total 10,000 rupees. And what will be the interest? 18% for 5 days delay, because interest is also payable as there is a delay by 5 days. So 6,000 into 18% into 5 divided by 365. That is 15 rupees will be payable as interest, but this 15 is total, not under CGST as GST, because we are taking total TCS. So this is a question on TCS connected with interest computation and late fee computation. Okay. Next, question number 27. Dobriel Technocrats Limited, registered in Gurgaon, Haryana, is engaged in manufacturing heavy steel machinery. It enters into an agreement with Mindsharp Associates, registered in Delhi, for imparting motivational training to the top management of Dobriel Technocrats in a 5-day residential motivational training program at an agreed consideration of 20 lakhs. Mindsharp Associates booked the conference call along with the rooms of Hotel Chamcham, Nimrana, registered in Rajasthan for training program. Now, you are required to determine the place of supply in respect of the supplies given in the scenario. First, what is the first thing? So, supplier, in the first paragraph, the supplier is Mindsharp Associates, is providing the training to Dobriel Technocrats. For training and performance appraisal, we have a specific provision. B2B, location of recipient. B to C, location where service is actually performed. It's B to B. Why B to B? Because the recipient is registered in Haryana. Okay, B to B. So we need to take location of recipient, that is Haryana. Where is Mindsharp Associates located? Delhi. Place of supply is Haryana. Just they are asking place of supply, so Haryana is the place of supply. Simple. Second, for hotel booking, so conference room booking of hall, who is the supplier? Hotel is the supplier and Mindsharp is the recipient. For service in relation to immobile property, location of immobile property will be taken. If the property is outside India, location of recipient. Here, the location of property should be taken. What is the location of property? Rajasthan. So, Rajasthan will be taken as the place of supply in this case. Okay. First service, training and performance appraisal, Gurgaon, Haryana. Second case, so location of immobile property, that is Rajasthan. Then question number 28, with reference to GST law, determine the place of supply with reasons in the following independent circumstances. Miss Kanika of Kolkata, West Bengal visited to Jodhpur Law University, Rajasthan and paid her college fees by purchasing a demand draft from a bank located in the university campus. Miss Kanika did not have any account with the bank. So, what will be taken as the place of supply in this case? Kanika of Kolkata, West Bengal. So, banking services. In case of banking services, general provisions will be applicable. We don't have any specific provisions. So, we need to take location of recipient in the records of supplier. If you see, Kanika does not have any account with the bank, means location of recipient not available in the records of supplier. Then in that case, location of supplier will be taken as place of supply. What is the location of supplier? That is bank. Where is the bank located? So, Jodhpur Law University, Rajasthan. Demand draft located in the university campus, that is Rajasthan, will be taken as the place of supply. So, Rajasthan will be taken as place of supply. Next, number 2. Mizu Machine Limited, registered in state of Andhra Pradesh, supplied machinery to KN Wind Farms Limited, registered in the state of Karnataka. However, the machinery was assembled or installed. So, in case of supply of goods that requires assembly or installation, as per section 10 subsection 1 clause D, the place of supply will be location of such installation. Where is it installed? At windmill of KN Wind Farms, so which is located in Tamil Nadu. So, Tamil Nadu will be taken as place of supply, that is location where it is installed. Then, question number 29, it's a September 24 RTP. Briefly examine the taxable value of supply in the following independent cases. G1 Limited, registered under GST, provided services amounting to 10 lakhs to a government authority by way of sanitation conservancy. So, what are the activities of person provided to government authorities exempted? First, sanitation conservancy. You remember this way. So, there is a person who is living in a slum, and that person living in the slum, so there is no proper water facility in the slum, and even the drainage and all will be open, and for which he gave a complaint to the government authority. What government authority did? So, they have filled the drainage with sanitation chemicals, etc., and all the garbage, waste and all cleared, and even people, because of this issue, lot of people got affected, and health got spoiled. Okay. Now, remember, person living in slum improvement and upgradation. Number 2, water problem, water supply. Number 3, health issue, public health. Next, drainage issue, sanitation conservancy, waste and all cleared, solid waste management. These 5 activities provided by any person to government authority is exempted. So, sanitation conservancy is there, due to that reason it will be exempted. Okay, is exempt under GST. Next, number 2, Raju Transporters, a registered GTA, provided service of transportation of goods to Kukreja and Kukreja Company, an unregistered partnership firm. Kukreja and Kukreja paid 8,000 to Raju Transporters as consideration. We have 3 exemptions for GTA. Number 1, if it is notified goods, we don't have the information about notified goods. Number 2, if the recipient is individual or HUF or trust or AJP and not having factory and they are not registered. So they are not covered under that because they are partnership firm. And if the recipient is government which is registered only to deduct TDS, not covered. So consequently, this will be taxable under GST. This service is taxable. Then Amardeep Hospital provided services in neonatal intensive care for 2 days for which 15,000 are charged per day from Mr. Chopra for his newborn son Virat. So first, in case of room charges collected by hospital, if it is any ICU charges, so any ICU, normal ICU, critical care intensive unit or neonatal intensive care unit, any ICU charges fully exempted, room charges. If it is other bed charges, per day if it does not exceed 5,000, it will be exempted. Here it is ICU, intensive care charges, because of which it will be exempted, and whatever may be the amount that is exempted. Then next, question number 30, briefly examine the place of supply in the following independent cases. This is JAN'25 RTP question. Miss Shanti, unregistered resident of Gujarat, went to meet her parents at the native place Patna, Bihar, and buys a medical insurance policy for her parents from an insurance company M&T Insurers of Patna. The location of recipient of service in the records of M&T Insurers is Patna. In case of insurance services, so we need to apply general provisions. The place of supply will be location of recipient in the records of supplier. So that is Patna. So Patna will be taken as the place of supply. Then B, Lakan Singh Transports Private Limited, a goods transport agency registered in Noida, Uttar Pradesh, is hired by Ram Trade Links, registered supplier in Delhi, to transport its consignment of goods from its warehouse in Delhi to the house of the buyer located in Roorkee, Uttar Pradesh. In case of transportation of goods, we have a specific provision, B2B location of recipient, B2C starting point of the goods. In this case, so who is the recipient? Recipient is Ram Trade Links registered. So as recipient is registered, location of recipient New Delhi will be taken as the place of supply. Then C, Mr. Karan, Mumbai, takes a postpaid mobile connection in Mumbai from the service provider Freesia Limited and gives his residence address at Mumbai as the address for billing with the said company. In case of mobile postpaid, we need to take billing address. So what is the billing address? So residence address of Mumbai will be taken. So Mumbai is taken as the place of supply. But we need to write the provision, explain, and then conclude this is the place of supply, like that. Next, question number 31. This is also RTP JAN'25 question. Blue Panda Private Limited is a manufacturing company that supplies goods to various registered dealers across India. The company had an aggregate turnover of 6 crores in the financial year 23-24. The finance team of the company is not sure whether e-invoicing provisions are applicable to the company and is of the view that under e-invoicing system, invoices needs to be generated directly on the e-invoicing portal instead of its ERP system. You are required to advise finance team on the following questions. Question number 1. What is e-invoicing and whether it would apply to Blue Panda Private Limited? E-invoicing means generating a normal invoice in the ERP system and uploading that in the invoice registration portal and obtaining 3 things. That is invoice, invoice reference number, QR code and digital signature is known as e-invoicing. And if a registered person aggregate turnover during any previous year from 17-18 exceeds 5 crores, then e-invoicing will be applicable. In this case, their aggregate turnover during previous year exceed 5 crores, 6 crores. So e-invoicing is applicable for outward supplies to registered persons during the current year. So that is what we need to write here. So the key points you see, first, turnover from 17-18 onwards, 17-18 onwards, any 1 year, if it exceeds 5 crore, for B2B supplies, e-invoice is applicable. Okay. Then does Blue Panda Private Limited need to create invoice directly on the invoice portal? No. They have to prepare the normal invoice using their accounting, billing or ERP, and these should be reported to invoice registration portal for generation of a unique invoice reference number. Then next, question number 32. This is September 24 RTP question. Runmo Limited, a registered entity under GST, has demerged its operations with effect from 31st October 2023. The registration of Runmo Limited has been cancelled suo motu by the proper officer. Yes. So whenever there is a transfer of business, that is one of the reasons for cancellation of registration. And the order for cancellation passed on 4th November 2023 and was served on 7 November 2023. Runmo Limited wishes to apply for revocation of cancellation of registration on 4th February 2024. And the tax consultant of Runmo Limited advised that application for revocation of cancellation of registration is time barred and hence not valid in law. You are required to examine the technical veracity of the advice given by tax consultant of Runmo Limited. So in this case, if you see, first they need to make application for revocation of cancellation within 90 days from the date on which they got the cancellation order. What is the date on which they got the cancellation order? 7 November 2023. So 90 days from 7 November 2023, they need to make application for revocation of cancellation, and this can be extended for a further period not exceeding 180 days by commissioner, additional commissioner or joint commissioner. Okay. So tax consultant is telling that it is time barred. No. So because 7th November 2023, 4th February 2024, so it is submitted on time within 90 days and therefore it is valid in law. So the contention of tax consultant is not valid. Okay. So this is a question related to revocation of cancellation of registration. Next, question 33. Mr. X, a registered person under GST, has aggregate turnover in the preceding financial year amounting to 8 crores. So their aggregate turnover is 8 crores. He is desirous to know whether e-invoicing is applicable for supplies made by registered person to government departments. A registered person whose aggregate turnover during the previous year exceed 5 crores is required to give e-invoice for the B2B supplies. Government, supply by government department or local authority, e-invoice not applicable, but supply to government department or local authority, e-invoice is applicable provided that government department is registered. But here they are registered only for deducting TDS. Even if they are registered only for the purpose of deducting TDS, but they are registered persons and they will have a GSTIN. So due to that reason, supplies to them requires e-invoice. That is why it is CBIC circular. The registered person whose turnover exceed the prescribed threshold limit is required to e-invoice for supplies made to such government departments. Okay, even though they are registered only for deducting TDS. So as per CBIC circular, only supplies by government departments or local authority do not require e-invoice, even if turnover exceeds 5 crores. Then question number 34. Ramlala Enterprises, registered in Delhi, is engaged in supply of interior decoration service to Andhra Bhavan located in Delhi. Now in this case, what will be the place of supply? Place of supply for interior decoration service. Interior decoration service means, so service in relation to immobile property and the property is in India. So location of property will be taken as a place of supply. So supplier in Delhi, place of supply also Delhi, and it's a intra-state supply chargeable to CGST, SGST up to this. Service contract is entered with government of Andhra Pradesh, registered only in Andhra Pradesh. The total contract value inclusive of GST is 15,50,000 and the payment for the same is due in October 2023. You are required to determine the amount of tax, if any, to be deducted in the above case, assuming the rate of CGST, SGST and IGST as 9%, 9% and 18% respectively. Will your answer be different if Ramlala Enterprises is registered under composition scheme? So first, what we need to see, if the recipient, it is an intrastate supply, but the place of supply and location of recipient is in different state, then TDS is not applicable. So supplies to government departments, TDS is applicable, but we have one point. That is, if it is an intrastate supply and location of recipient is in the different state, okay, so then TDS not applicable in this case. Since the location of supplier and place of supply is Delhi and the state of registration of recipient is Andhra Pradesh, TDS not applicable. Even if that person is under composition scheme, the effect will be same. So first you need to write about the TDS provisions, when TDS is applicable. So threshold limit 2,50,000 and supplies to notified recipients, and thereafter you need to determine the place of supply, and then you need to tell, as the place of supply is in the same state but recipient in other state, TDS not applicable. Okay. Then question number 35, it's a JAN'25 RTP. Mr. Boluram, a supplier located in Meerut, Uttar Pradesh, supplied the bed sheets, pillow covers and blankets to a governmental agency registered in Uttar Pradesh under a contract. Total contract value is 4,61,000. Excluding GST, the value of supply is bifurcated as below. Is government agency required to deduct TDS while making payment to Mr. Boluram under section 51? If yes, determine the amount of TDS. So here, supply to notified recipient. Is government agency notified recipient? Yes. Government agency is a notified recipient, and TDS will be applicable 2% if the value of supply under the contract exceed 2,50,000. Yes, the value of supply under the contract exceed 2,50,000. So TDS will be applicable. And here, what is the TDS total? How much ever amount that is remitted on that 2%. Okay. So 4,61,000 into 2%, that is 1% CGST and 1% SGST, because it is intrastate supply. Supplier located in Meerut, UP, supplied bed sheets to government agency registered in UP. In case of goods, ending point will be taken as a place of supply as per 10(1)(a). So accordingly, location of supplier Uttar Pradesh, place of supply also Uttar Pradesh, and it's an intrastate supply chargeable to CGST, SGST. So the recipient should deduct 1% TDS towards CGST and 1% TDS towards SGST. So that is what we need to write. Here the total value, don't see the individual value, total value of supplies under the contract exceed 2,50,000. TDS is applicable, but the TDS is computed on the amount remitted. So that is CGST, SGST each 4,610. Then next, question number 36. The Resident Welfare Association of Blue Heaven Housing Society in Delhi provides the following information with respect to various amounts received by it in the month of January 2021. Monthly subscription collected from member families 8,500 each from 100 families. So 8,500 from 100 families. So that will be taken as the value. Okay. Now there are other items also. So now we need to see what is the total monthly charges per month. So because we have one exemption, services provided by a Resident Welfare Association to its members, where the monthly maintenance charges per month per member does not exceed 7,500, then it will be exempted. If it exceeds 7,500 per month per member, then entirely it will be taxable. So in this case, that per month charges we need to compute. So first 8,500 rupees per month, that is some charges 8,500 should be taken. Okay. 8,500 will be taken. After this, we need to see electricity charges levied by State Electricity Board on the members, directly on the members. The same was collected from the members and remitted to the board on behalf of members. As the bill is in the name of the members and the association has collected it from members and remitted, that will not be included in the value. So don't include it in the value. This 3,50,000 don't include. Okay, don't include that. Then electricity charges levied by State Electricity Board and Resident Welfare Association in respect of electricity consumed for common use of lifts and lights in common area. So the bill is in the name of the association. Bill is in the name of association. We have a CBSE circular related to this. If the bill is in the name of the association and they incur the electricity charges and recover only the actual amount, Resident Welfare Association collected the said charges by apportioning them equally on actual basis, as charged by State Electricity Board among 100 families. Again, this is also not to be included. What if they collect some ad hoc amount? Then it will be included. Proceeds from sale of entry tickets, that's a separate transaction. Proceeds from sale of advertisement is a separate transaction. Now you see this 8,500 which exceeds 7,500. So therefore entirely it will be taxable. Okay. So exceeds 7,500. So entirely it will be taxable. In this case, value of taxable service 8,50,000. Then proceeds from sale of entry tickets to cultural program conducted by Resident Welfare Association in the park of Brewhaven Housing Society 40,000. What about that? Entry tickets to park. National park only we have exemption, but normal park entry ticket will be taxable. So 40,000 is taxable. Sale of space for advertisement, we don't have any exemption. So it will be taxable. So therefore already 8,50,000 plus this 40 and 3 lakhs. So 11,90,000 will be taken as the answer. And we need to write the explanation here. That is first one more than 7,500 and this circular. Only if actual basis they are collecting, then that should not be included in the value. Next, question number 37. A Limited is engaged in fertilizer manufacturing in Karnataka. It has GST registration from Karnataka. A Limited does not have registration in any other state or union territory. X is the head of finance department of the company. On January 10, X goes to Mumbai to attend a 3-day conference on international finance organized by Harvard Business School at Nariman Point. For the purpose, okay, he incurs the following expenditure. Bengaluru Mumbai air ticket paid to Air Vistara Karnataka 26,000 plus GST. Now here in case of the air ticket, first we need to determine the place of supply. Transportation of passengers, B2B or B2C we need to see. If it is B2B, location of recipient. If it is B2C, starting point of the passenger. If you observe here, these expenses are paid by check by A Limited. Recipient of supply is A Limited. GST of A Limited is given in tax invoice, means B2B. So we need to take location of recipient. Where is the recipient located? Karnataka. So Karnataka will be taken as the place of supply in the first case. And what is the location of supplier? Karnataka. Place of supply also Karnataka. Therefore it is intrastate supply. Next one. 3-day conference participation fee paid to Harvard Business School at the time of registration in Mumbai. See, conference participation fee cannot be taken as, training and performance appraisal. We need to treat it as admission to an event. Admission to an event, place of supply is location of the event. So where is the conference held? Conference held at Mumbai. So Mumbai will be taken as the place of supply in this case. Okay. So here it should not be taken as training and performance appraisal. It should be taken as conference participation. See, conference, only if certification is given or some training is involved, then only it will be training and performance appraisal. Otherwise, it will be taken as location where event is held. So conference participation, we need to apply conference participation, we need to apply training, not training, admission to an event. What is the location of event? Location of event is Mumbai, and where is that person located? Karnataka. Therefore it will be coming under interstate supply. Then next, hotel expenditure paid to Taj Hotels Mumbai. Hotel accommodation, place of supply will be location of property. The property is located in Mumbai, so supplier also Mumbai. Therefore it is intrastate supply. So lodging accommodation, place of supply will be Mumbai, and it is intrastate supply. Then next one, Mumbai Bengaluru air ticket paid to Air India Mumbai. Again, place of supply will be location of recipient Karnataka. So Karnataka will be taken and it will be coming under intrastate supply. Okay. So for these 4 points you need to answer what is the place of supply and again nature of supply. This type of questions also could be tested on place of supply rather than directly asking. So application based. Next, question 38. From the following information, determine the value of taxable supply as per the provisions of section 15 of CGST Act 2017. Value of machine including GST at 12% is 15 lakhs. The invoice includes the following: taxes other than CGST, SGST, IGST charged separately by the supplier 15,000. Then weighment charges. So first the invoice includes the following. So this will be taken as a transaction value. and as per 15(2)(a), taxes, duties and cess by whatever name called other than GST charged by supplier to recipient should be included, and in the given price it is already included, so ignore, don't add that. Weighment charges 15(2)(c) and consultancy charges 15(2)(c), testing charges 15(2)(c), inspection charges 15(2)(c), all these are other expenses incurred by supplier and charged to recipient before or at the time of delivery of goods or supply of services. Therefore, it should be including the value in this case. So, this 25,000, 10,000, 2,000 and 4,500 to be included, and it is already included. So, ignore, because all these are before delivery of goods. Then other information, subsidy received from central government for setting up factory in the backward region. So, whether the given price is after considering subsidy or without considering the subsidy. So, we need to take the suitable assumptions. So, therefore, we will assume that the given price is after considering the subsidy, and for setting up a factory in backward region, so can we take that subsidy as directly linked to the price? No, this is not a subsidy directly linked to the price. When there is a subsidy not directly linked to the price, it will not be considered in the value. Okay, so ignore this subsidy of 51,000. Why this subsidy of 51,000 needs to be ignored? Because this subsidy is not directly linked to the price, and it is from a person, let it be any person, not directly linked to the price. So, don't take it into consideration. Subsidy received from third party for timely supply of machine, directly linked to price, and it is from other than CGST, it is to be included. But in the given price, we are assuming that the given price is after considering the subsidy. So, this 50,000 we need to add. Trade discount actually allowed, shown separately in the invoice, this we need to deduct. So, that is where we will be getting the value of supply. Okay. Then next, and on the top of that we need to compute the GST at the rate of 12%. Now, we are moving on to question number 39. UCO Bank has a branch in Aurangabad engaged in supply of services by way of accepting deposits and extending loans, opted for the option to avail credit of 50% of input tax of the month. So, there are two options available to a bank, financial institution, NBFC, proportionate ITC option and 50% ITC option. So, this bank wanted to go for 50% ITC option. So, for which under 17 subsection 4, it has a head office at Pune. Input tax credit available for the month of October 2021 is rupees 1,20,000, which includes total input tax credit. So, that is, this is the total ITC that they have. Determine the amount of input tax credit of October that can be availed by UCO Bank. So, what is the ITC that can be availed under 50% option? So, with respect to all inward supplies, so 50% can be taken, but with respect to inward supply from a distinct person, so 100% can be taken. Then one more point, blocked credit and ineligible credit, that is inward supply used for non-business purpose, should not be taken. Okay. Now, here if you see, total will be 1,20,000. So, 1,20,000 is the total credit. Out of this 1,20,000, services availed from its distinct establishment from Pune head office. So, minus 27,000 will deduct. So, just to check what is the balance. Okay. And in this case, we can take 100%. Okay. Then outdoor catering services, you cannot take ITC. Why you cannot take ITC? Because it will be blocked credit. Then goods obsolete and the value of which is written off in the books. Even ITC cannot be taken on that. Auditing services, for auditing services ITC can be taken, but only 50%. So, take out minus 32,000, minus 11,000, minus 25,000, and then goods for personal use of employees. Any goods purchased and used for personal purpose, ITC not available. Okay. So, now if you see, so this 7,500 also you take out, now you will be getting the balance. So, total 1,20,000, out of that 1,20,000, you take out all the given numbers, so you will get a balancing figure. So, 27,000, thereafter 32,000, and next 11,000, and next 25,000, and 7,500. So, the balance is 17,500. On the 17,500, we can take 50%. Okay, so 27,000 we can take 100%, so 27,000. 25,000 15%, 12,500. 17,500 into 50%, that will be 8,750. So therefore 27,000 plus 12,500 plus 8,750, that is 48,250 is the ITC that can be availed. Okay, so how we calculated? First, total 1,20,000 minus 27,000, so that is 93,000, so can be taken, and from this all these things is reduced. So now we got the remaining 50%, and inward supply from distinct person full credit can be taken, so total ITC will be 48,250. So remember, while doing the 50% option, so inward supply from a distinct person 100%, blocked credit should not be taken, then non-business purpose should not be taken, remaining can be taken, but that should be restricted to 50%. Okay, so based on this we have computed this question. Then next question number 40, Messrs ABC Limited have belatedly filed GST return under section 39 for the month of January after 60 days from the due date of filing such return. Total tax paid in such return is as below: output tax payable, tax paid under RCM, input tax available for utilization. Now what is the gross GST? 4,50,000 and minus ITC available for utilization 2,50,000 should be reduced. Then RCM liability we need to add, then only we will get the net GST liability. So remember how to compute net GST liability: gross GST payable minus input tax credit plus RCM, you will get net liability. Now what is the question? Examine the interest payable as per the provisions of GST law. What would your answer if entire tax for the month of January has to be paid through electronic credit ledger except taxes to be paid on reverse charge basis? So here simple, what has happened is that output tax payable is 4,50,000. 4,50,000 minus 2,50,000 we can utilize. 4,50,000 minus 2,50,000 we can utilize, so that will be 2 lakhs, and RCM anyhow we need to pay, so plus 18,000, so 2,18,000. So 2,18,000 will be taken, whereas here 2,85,000 minus 55, okay, so 2,30,000 plus 32, 2,62,000, 2,62,000. Now this should be taken as a net liability because there is a delay in filing 3B. There is a delay in filing 3B. So therefore section 39 means 3B return for the month of January after 60 days from the due date. So there is a delay by 60 days. What is the rate of interest? 18%. So therefore 2,18,000 into 18% into 60 by 365, 6,450, like that we need to compute. Then see the next question. What would your answer if entire tax for the month of January has been paid through electronic credit ledger except taxes to be paid on reverse charge? Yes, because definitely taxes through RCM liability cannot be paid through electronic credit ledger, it can be paid only through cash ledger. So what is that? 18,000, 32,000, 32,000. So 18, 32 and 32 into 18% for 60 days. This is the interest payable. Next, question number 41. This is a RTP for JAN'25. Vintage Cinemas Private Limited is a leading chain of multiplexes operating in several states across India. The company has its corporate office in Mumbai, Maharashtra and is registered under GST in multiple states including Maharashtra. The company offers movie tickets, food and beverages and other entertainment related services. Okay, so basically they are into cinema, multiplex theatre, and the turnover of the company in the preceding financial year as per the audited financial statements was 175 crores, and the company crossed the aggregate turnover of 35 crore till June in the current financial year. Now in July, VCPL opened a new multiplex in Gujarat wherein the commercial operations will commence from August 1st. So this is the data. Now due to operations in multiple states, the finance and accounts operations are handled by a centralized team at the corporate office. The same team is also responsible for filing the GST returns for all the GST registrations of the company. As they are operating in multiple states, they will have multiple GST registrations. The company is also engaged in leasing of space to independent vendors in its food court against rental charges for the purpose of increasing the source of revenue. The company obtained a new office building in Mumbai under a rental agreement and paid the amount of 5 crore as refundable security deposit to the owner of the premises. The term of the rental agreement is 5 years. It's a refundable security deposit which will not be treated as consideration. The company also dispatched advertisement material worth 35 lakhs from Maharashtra to Gujarat Multiplex for the upcoming movies by way of transport through road in September. The company claimed ITC on such advertisement material at the time of receipt. The rate on inward supplies and outward supplies is 18% IGST, 9% CGST, 9% SGST. Now, this is the paragraph. Based on this, they have given the case scenario MCQs. Which of the following statements is correct under GST law in relation to registration requirement of the company in relation to its operations to be commenced in the state of Gujarat? See, already their aggregate turnover exceeds 35 crores and all. So definitely they are required to get registered in Gujarat. So once a person's aggregate turnover across the country exceed threshold limit, they need to register in each state from where they are making taxable supplies. So in this case, VCPL is not required to take registration is wrong. VCPL is required to take registration while commencing business in Gujarat, as aggregate turnover of VCPL has already exceeded 20 lakhs in the current financial year. Option B is the correct answer, because Gujarat already they are doing business in multiple states. They have head office in Maharashtra. Now they commence in Gujarat. So Gujarat they need to take. Not that Gujarat Multiplex has additional place of business in Maharashtra registration. Impossible. That is within the state only. When you are already having a registration, you can add one place as your additional place of business. VCPL is required to take GST registration only from next financial year, subject to the condition that turnover of current financial year exceeds 20 lakhs. No, that is also wrong. So option B is the answer. Okay. Next, second, which of the following statement is true in relation to filing of returns by VCPL? So VCPL is required to file a single consolidated GST return for all states. No. When they have registration in multiple states, for each state they need to file a separate return. So they need to file a separate GST return where for each state where it is registered. Correct. Is required to file returns only in Maharashtra where it's corporate? No. And they are having option to file return in the state with highest turnover? No. Every state from where they are making taxable supplies, they need to file returns in that state. They have registered. Okay. So again for second also the option is B. VCPL is required to levy GST on rental charges. So see here what is happened. The company obtained a new office building in Mumbai under a rental agreement and paid amount of 5 crore as refundable security deposit to the owner of the premises. The term of the rental agreement is 5 years. Okay. So here rental will be payable definitely. So VCPL is required to levy GST on rental charges only if turnover of the tenant exceeds 20 lakhs, only if turnover of the tenant exceeds 1.5 crores, only if total rental charge collection in the hands of VCPL exceeds 20 lakhs, irrespective of the amount of turnover of tenant or the amount of rental charge collection in the hands of VCPL. Yes, because see, already they are registered. So with respect to rent, definitely they need to pay GST and whatever may be. So we don't have to see whether the recipient, the tenant is registered or not, etc. So irrespective of the turnover, so they need to pay GST. They need to levy GST on the rental charges. Is it clear? Then next, we have one more point. In respect of refundable security deposit given by VCPL, GST is payable on the deposit? No. GST is not payable. So GST is not at all payable. There is no requirement to pay GST by the owner or VCPL. Why? Because refundable security deposits will not be treated as consideration. So from the meaning of consideration, it is excluded. Then VCPL is dash for advertisement material sent from Maharashtra office to Gujarat office. Maharashtra office to Gujarat office, they are sending. It's a transaction between distinct person. not liable to issue any document as a transaction between entities having same permanent account number. Wrong. Delivery challan, wrong. It is supply. Once it is supply, definitely invoice only will come. Bill of supply will not come because it is taxable. So liable to generate tax invoice as well as e-way bill. Once taxable goods are transported from one location to another location, definitely e-way bill also will come. So option D is the answer. So pretty easy question only, it's not that complicated question. Then next one, this is an RTP September 24 question. XYZ Private Limited is a mid-sized company registered in Delhi, dealing in the manufacturing and distribution of electronic goods in India. The company has been operating for over a decade and has a robust supply chain network across the country. The company needs to ensure compliance with various GST regulations related to return filing, registration and payment of tax. So they are having registered office in Delhi and they are engaged in manufacturing and distribution of electronic goods in India. The company is exploring to expand its sales channel in India through distributors in each state. In view of the same, the company has undertaken the following activities in the month of June. Organized a distributor conclave in Udaipur, Rajasthan, where the distributors from Rajasthan, Gujarat and Madhya Pradesh participated in the conclave held in Rajasthan. The total cost of hotel accommodation was 25 lakhs, which was paid by the Delhi office to the hotel located in Rajasthan. So they organized a conclave where distributors participated. Hotel accommodation cost was 25 lakhs, which was paid by the Delhi office. Now, what is it we need to answer in this? The rate of applicable tax, and they have given some questions. So here, see the first question related to this. Which of the following statement is correct under GST law in relation to hotel accommodation service received by the company? So whether it is intrastate or interstate, what is the location of supplier? Hotel. Where is the hotel located? Hotel in Rajasthan. Location of supplier Rajasthan. And any service in relation to immobile property, so place of supply will be location of immobile property. Therefore it is a intrastate supply. Why it is an intrastate supply? As per section 12, the place of supply will be location of immobile property. So what will be taken as place of supply? Location of immovable property. Location of immovable property will be taken as a place of supply. So due to that reason, it will be coming under intrastate supply. The company purchased certain gift items for distribution to the participants in the conclave. The gift items were purchased from the vendor located in Ludhiana, Punjab, and were delivered to the hotel in Udaipur, Rajasthan for distribution to the participants of the conclave. The cost of such gift item was 25 lakhs. However, the value of individual gift items was restricted to 75,000. So gift items were distributed. So gift means definitely without consideration, okay, to the participants, and they were purchased from a vendor. So this activity is not a supply. So let's complete the first MCQ. So the hotel shall charge CGST, SGST in the invoice issued to the company. Correct. And hotel shall charge IGST. No. Hotel shall issue bill of supply. No. Hotel shall charge CGST, SGST to the extent of charges are related to participants of Rajasthan, and IGST to the participants of Gujarat. No. Always the place of supply will be location of immobile property for hotel accommodation service. So for the first one, the answer is A. Then what is the place of supply in relation to gift items purchased? So they purchased the gift items na. From where they purchased the gift items? Vendor located in Ludhiana, Punjab, and were delivered to the hotel in Udaipur, Rajasthan. So the place of supply will be ending point. In case the supply involves movement of goods, as per section 10(1)(a), we will see under 2, sale to registered person. They are registered person, sale to registered person. If it is sale to unregistered person, location of recipient in the records of supplier, otherwise location of supplier. But this is sale to registered person. So place of supply as per 10(1)(a) is ending point of goods. What is the ending point of goods? Udaipur, Rajasthan. Supplier Punjab, Udaipur, Rajasthan. So that will be taken as the place of supply. So Rajasthan, that is the location where goods were delivered. Delhi, no. Punjab also no. So therefore for second also, the option One second. So here this is gift items were purchased from the vendor located in Ludhiana, Punjab and were delivered in Udaipur, Rajasthan for distribution to the participants of the conclave. Okay. And here who purchased? the company, private limited company registered in Delhi, so dealing in manufacturing and distribution. So in this case actually the answer should be Udaipur, Rajasthan only, because as per 10(1)(a), supply involves movement of goods na, because the goods were delivered, the gift items were delivered to the hotel in Udaipur, Rajasthan. So accordingly it should be Rajasthan, location where the goods were delivered. But here carefully listen, can't we bring it under bill to ship to transactions are possible? Why bill to ship to transactions? Because who placed the order? They are registered in Delhi. So the order is placed by XYZ Private Limited in Delhi and they are asking them to deliver in a different location, that is Udaipur, Rajasthan. So billing address will be Delhi and shipping address will be Udaipur, Rajasthan. Then we should not take 10(1)(a). Then what should be taken? 10(1)(b). So the place of supply under section 10(1)(b) will be billing address. So what is the billing address? The billing address will be, Delhi only. So therefore, sir, why can't the 10(1)(a) will come? See, 10(1)(a) will come if the one who placed the order, to that person only if I am delivering. But here when I am delivering to a different person or a different place, it is coming under bill to ship to transactions. So therefore, in case of bill to ship to transactions 10(1)(b), billing address will be taken as the place of supply, that is Delhi. Then next, the company purchased an insurance policy for its employees traveling for the conclave, and the premium for such insurance policy was 1 lakh, which was paid by the company. There is no requirement under any law requiring such insurance policy. Okay. Related to this, there is one question: which of the following statements is true in relation to gift items and insurance policy purchased by the company? ITC. Can they take ITC on purchased goods distributed for gifts or free samples? No, it's a blocked credit. Even on insurance, life insurance and health insurance on employees also block credit unless it is under a statutory obligation. So it is not under a statutory obligation. So due to that reason, ITC not available. The company is not eligible to avail ITC in relation to both gift items and insurance policy. Option A is the answer, and they cannot take ITC on anything. Then next one, the company took on rent a new warehouse near its factory in Delhi for storage and dispatch of goods. The goods are being transported between the factory and new warehouse in non-motorized cart. The value of such goods transported in single trip is up to rupees 5 lakhs. Further, the rent of the warehouse is 18 lakhs for the initial 11 months and the same shall be revised to 21 lakhs after expiry of initial 11 months. The rate of tax applicable is 18% IGST, 9% CGST and SGST each unless otherwise specified. On the basis of the facts given above, choose the most appropriate answer to question number 1 to question number 5 below. Okay, so here what happened? The company took on rent a new warehouse near its factory in Delhi for storage and dispatch of goods. The goods are being transported between the factory and new warehouse in a non-motorized cart. Non-motorized cart means e-way not required. The value of such goods is 5 lakhs, let it be. Rent of the warehouse 18 lakhs for initial 11 months and same shall be revised to 21 lakhs. Now they are asking which of the following statements is correct in relation to issuance of e-way bill for transportation of goods between factory and warehouse in non-motorized vehicles. For non-motorized vehicle, e-way bill is not required. E-way bill not required to be issued in the given case irrespective of the consignment value of the goods. Then, which of the following statement is most appropriate in relation to new warehouse taken on rent by the company? What is the place where they are taking? They are taking near its factory in Delhi for storage and dispatch of goods. Already they have registration in Delhi. Now they are taking a warehouse in Delhi. Now, whether separate registration is mandatory? No. Separate registration is not required mandatorily. They can show, as they are already registered in Delhi, they can show the warehouse as their additional place of business. So no need to take a separate registration with respect to the warehouse. Okay. Then next one, question number 43. So this is RTP May 24 question. ABC Limited has its manufacturing unit in the state of Rajasthan. Further, it has ancillary units in the state of Madhya Pradesh and Gujarat and is registered in each of these states. Moreover, ABC Limited owns and operates a hotel in Udaipur, Rajasthan. In addition to the aforesaid, so basically they are having a manufacturing unit in Rajasthan. It has ancillary units where Madhya Pradesh, Gujarat and is registered, and they have a hotel in Udaipur, Rajasthan. In addition to the aforesaid, ABC Limited owns a commercial space which is rented out to a registered person at a monthly rent of 50,000. The maintenance of the premise is the responsibility of ABC Limited. In pursuance of the same, during the month of April, ABC Limited incurred certain expenses on the purchase of maintenance related materials. The said expenses are recoverable from the tenant. So expenditure, maintenance expenditure incurred by the supplier and charged to recipient along with invoice issued for the rent. The rate of tax applicable on the material used for maintenance was 5%. During the year, ABC Limited agreed to provide the hotel to Mr. X for a business conference to be held at Udaipur. Mr. X is an unregistered person residing in Maharashtra. Okay, so during the year, ABC Limited agreed to provide a hotel to X for a business conference. X is not a registered person, unregistered person. ABC Limited made a supply of machinery in the month of June, details of which is as follows. So they gave the details. Basic price of the machinery before TCS and income tax 45,000, that will be taken as transaction value. TCS will not be included in the value because tax collected at source is an interim levy not having the character of tax. It should not be included in the value under 15(2)(a). We have a CBSE circular related to that. 2,500 is the tax collected at source, so that will not be taken. Then it received a subsidy of 3,500 from Green Foundation Private Limited for usage of green energy, and subsidy was linked to the units of energy saved and not aforesaid machinery. Means the subsidy is not directly linked to the price. So the subsidy should be ignored and not considered in the value. In addition to the aforesaid transactions, ABC Limited spent an amount of 5 lakhs on the procurement of certain goods which were distributed as part of corporate social responsibility expenditure required under the provisions of Companies Act 2013. During the scrutiny proceedings in the state of Gujarat, jurisdictional GST officer asked ABC Limited to submit a copy of audited financial statements for Gujarat and was of the view that ABC Limited is required to get its accounts audited by a chartered accountant separately under GST law for filing annual return and reconciliation statement in each state. All above amounts are exclusive of GST wherever applicable. Now, based on the facts of the case scenario given above, choose the most appropriate answer to question number 1 to 5 below. For the transaction related to renting of commercial space, what should be the rate of tax charged by ABC Limited? For the transaction related to renting of commercial space. So they are renting na, to whom they are giving on rent? They are giving on rent to a registered person, correct? Commercial space given on rent to a registered person. And at a monthly rent of 50,000, is it FCM or RCM? Only residential property given on rent to a registered person is RCM, but commercial property given on rent will be FCM. Okay, so they are telling the rate of GST on rent and maintenance material related recovery will be 18%, rent will be 18, material will be 5. So actually it is included in the value. That maintenance material incurred is included in the value, of rent. So rent is taxable at what rate? The rent will be taxable at 18%. When the rent is taxable at 18%, you can see here. So all other cases the rate will be 18%. So therefore option A is the correct. Okay. So the rate of GST on rent and maintenance will be 18% because it is included. Now, when it is included, we will take the rate of the principal supply only. Compute the value of supply under section 15 made by ABC Limited in the month of June. What will be taken? 45,000, and there is nothing else. All these things will not be included. So only 45,000 will be taken as the answer. Okay. Next, With respect to hotel accommodation service provided to Mr. X, GST payable by ABC Limited is. So, hotel accommodation is provided. See this? ABC Limited agreed to provide a hotel to X for a business conference. Okay. Mr. X is an unregistered person. Always for hotel accommodation, location of property will be taken as a place of supply and ABC Limited only will pay GST. Okay. So, here GST will be in the nature of CGST as GST, option C. So, not nil, it will be chargeable to GST in the nature of CGST as GST because location of supplier hotel, place of supply also location of hotel. So, chargeable to CGST as GST. They are telling accommodation service GST is payable by recipient under RCM. No, that is only for renting of residential property, not for the commercial property. RCM will not be applicable. Then next, fourth question, which of the following options is correct regarding ITZ availability to ABC Limited in relation to CSR? They cannot take ITZ because it's a blocked credit now. So, amount of ITZ is not available to ABC Limited because it's a blocked credit. Section 17 subsection 5 ITZ cannot be availed. Which of the following options is correct with regard to advice given by GST officer in respect of auditing of accounts? What is the officer that they are telling? What is the advice? So, during the scrutiny proceedings in the state of Gujarat, jurisdictional officer asked ABC to submit a copy of audited financial statements and was of the view that ABC Limited is required to get his accounts audited by a chartered accountant separately for filing annual return and reconciliation statement. No. Now GSTR 9C is self-certified reconciliation statement. Audited, it's not audited. So therefore, there is no requirement of separate audit. That was previously, but now not required. That too, reconciliation statement is submitted in GSTR 5C if aggregate turnover exceeds 5 crores. Okay. So that is the answer for this. Then question number 44. Messrs. KBC Insurance Limited is an insurance company providing life and non-life products across India. The company is carrying on its business for the past 3 years with the approval of IRDA. Messrs. KBC Insurance Limited secure its business through various insurance agents spread across India. Those agents include individuals, firm, LLP and private limited company also. However, all of them are licensed under Insurance Act. The company availed service of renting of motor vehicles for its employees in Pan India through RR Travels Private Limited, where cost of fuel is included in the consideration charge and the rate of GST is 5%. Renting a motor vehicle, supplier should be other than body corporate, but here supplier is body corporate. So it will not be RCM, it will be FCM only. So KBC Insurance Limited will not pay GST under RCM. Then Messrs. KBC Insurance Limited provided the following details of insurance business for the month of May. So they have got lot of details. Premium received on Pradhana Mantri Jan Dhan Yojana exempted. Premium received on Aam Aadmi Bima Yojana exempted. Premium received on life micro insurance product having a sum assured of 2.5 lakhs. Taxable, maximum sum assured of 2 lakhs is only exempted, micro life insurance. Premium received on reinsurance of group personal accident policy for self-employed women. So we discussed if the policy is related to below poverty line, farmers and women, that will be exempted. Premium received on fire and special perils policy of various business units, taxable. Premium received on money back policies issued, taxable, that is taxable. So 4 lakhs and then 7 lakhs and 12 lakhs will be taxable. Messrs. KBC Insurance Limited received a proposal for pandemic insurance for IPL matches from the franchisees. Sum assured for the said insurance was 250 crores with a premium of 50 lakhs. The company issued the said policy on 1st July. Invoice for the same was issued on 5th August. Premium was received on 14th August. Okay. So this is for insurance. Sum assured, premium 50. The company issued the policy on 1st July. Invoice was also issued on 5th August, but the premium is received on 14th August related to time of supply. They are asking. Invoice dated 5th August issued by the company contained the following information: serial number, name of the recipient, address of the recipient, taxable value, date of its issue, amount of tax charged. Measures KBC Insurance Limited received the following supplies in the month of May, and the details of GST paid on such supplies are as follows. GST paid on purchase of car used for managing director, GST paid on bus purchased by the company for transportation of its employees, GST of 80,000 was paid on general insurance taken from Amity Insurance for motor vehicles. Okay, all the amounts given above are exclusive of taxes wherever applicable. All the supply referred above is intrastate unless specified otherwise. Aggregate turnover of the company is not less than 10 crores for the past 3 years. Conditions necessary for availment of ITC are fulfilled subject to the information given. Based on the information given above, choose the most appropriate answer for the following questions. First, determine the services on which the company is liable to pay tax under reverse charge. So, what are the services on which they need to pay tax under reverse charge? See, service availed from insurance agents. So, here insurance agent services to insurance company will be covered under RCM. Okay. Service availed from RR Travels, no. None of the service attracts, no. Only option A. So, the first one is option A, because insurance agent services to insurance company is covered under RCM. Compute the value of exempt supply provided by KBC Insurance for the month of May. So, what is that exempted? 5 plus 3, 8, 8 plus 1, 9 lakhs. Option A. So, for second one also option A is the answer. Compute the value of taxable supply made by KBC Insurance for the month of May. So, what is that? So, 4 plus 7, that is 11, 11 plus 12, 23 lakhs. Option C. Determine the amount of ITC that can be claimed by KBC Insurance Limited. See the inward supply. Purchase of car for use of managing director, no. So, they cannot take ITC because car is a motor vehicle. Capacity does not exceed 13 passengers, not used in the transportation of passengers or further supply or under imparting driving skills. It is not available. GST paid on bus seating capacity 14 passengers. Yes, they can take ITC with respect to that because the capacity exceeds 13. Next, GST of 80,000 was paid on general insurance taken from Amity Insurance for motor vehicles for transportation of persons with capacity that not exceed 13. As this does not exceed 13, so it is a block credit. So, on general insurance also they cannot take ITC. So, only on 3 lakhs they can take ITC. So, for 4, it is, one second, is there any other inward supply? Is there any other inward supply? Yes, here they received something, na? They received something, one second. GST of 80,000 was paid on general insurance taken from Amity for motor vehicles for transportation of persons with the seating capacity does not exceed 13, including the driver, which were used in transportation of staff of the company. Okay. So, basically here motor vehicles used for transportation of persons, capacity does not exceed 13 is a block credit. Correct? Capacity does not exceed 13 including the driver is a block credit. And if the motor vehicle purchase which were used in transportation of staff of the company, means not used in the transportation of passengers, they are not in the business of transportation of passengers. So, as they cannot take ITC with respect to the motor vehicle, on general insurance service also they cannot take ITC. Okay. So, answer should be 3 lakhs only. So, but it is given as 3,80,000. So, option B is the answer. Determine the time of supply of service provided to IPL franchisees. What is the time of supply? Insurance is a service, continuous supply of services. So, here whether invoice is given within the due date or not, we need to see. So, invoice issued for the same on 5th August, premium was received on 5th August. The company issued the said policy on 1st July. Okay. Now, in this case, we need to determine what will be taken as the date of completion. Date of completion is 1st July and invoice 5th August. Invoice is issued within 30 days. So therefore 5th August or 14th August, whichever is earlier. So therefore 5th August will be taken. Option C. Which of the following details are not mandatorily required to be mentioned in the invoice issued by the company? So serial number is not mandatory, name of the recipient, then taxable value, amount of tax charged is mandatory. Serial number is not mandatory for availment of ITC. See, basically to be mentioned in the invoice issued by the company, which of the following details are not mandatorily required for not ITC purpose. Okay. So here if you see, so serial number is like, see, 5th August issued by the company contain the following details, and actually this question should be is like little confusing, because what happens is that for ITC purpose, what are the details that should be present in the invoice, like that it should be given. Serial number is not relevant for ITC. Basically it should be for ITC purpose. For ITC purpose, what are the details that should be present? GSTN of supplier, GSTN of the recipient, then description, value and tax. Place of supply in case of interstate supply. 6. So name of the recipient, then taxable value, date of issue, amount of tax charged. Even date of issue is required. So they are telling serial number and address of the recipient is not required. Okay. So say this, 1 and 3 not required. 1 and 3, that is serial number and address of the recipient. So they should have given this question in the context of the ITC, then it will be correct. Then next, question number 45. Messrs. Vittal and Company, a registered supplier under GST, is dealing in supply of taxable goods in the state of Karnataka. The firm opted for composition scheme. Since April, its turnover crossed 1.5 crores on 9th May and has opted for withdrawal of composition scheme on the said date. Vittal and Co. sent goods on 10th June to Suri and Co. on sale or return basis. Suri and Co. accepted the goods via its confirmation mail dated 15 September. The firm has paid GST for various items during the month of August. It comprised of the following: GST paid on input services intended to be used for personal purpose 12,000, GST paid on purchase of motor vehicle for business use being a two-wheeler having engine capacity 25cc, GST paid on purchase of computer 19,000. Basically, input services used for personal purpose ITC not available. Motor vehicle capacity 25cc. Okay. So basically motor vehicle having a capacity 25cc, is eligible for ITC. Okay. Up to 25cc. GST paid on purchase of computer also ITC available. So in this 19,000, what has happened? GST portion was not included as a part of cost to claim depreciation under Income Tax Act. Not included. Was included or not included? Was included, which means ITC not available. So generally motor vehicle means, so motor vehicle has a definition as per Motor Vehicle Act. The capacity not exceeding 25cc is excluded from the meaning of motor vehicle. So therefore ITC will be available in this case. During May, Vittal and Company has reversed ITC of 10,000 for not making payment to vendors within the time prescribed under CGST Act. This pending payment was cleared in the month of August. Out of purchases made and ITC availed during earlier months, the following information is made available as on September. Supplier name, payment is due for, and related ITC component. Now Vittal and Co. received accounting services from Raghu and Company and Associated Enterprises located in Sri Lanka. Raghu and Company issued invoice for the service on 1st September, which was entered by Vittal and Company in its book on 10th October, but the payment was made on 30th September. All the supply referred above is intrastate unless specified otherwise. Condition applicable for availment of ITC are fulfilled subject to the information given above. Based on the information, choose the most appropriate answer for the following questions. Vittal and Company need to furnish a statement containing details of stock of inputs input held in finished goods on the withdrawal of composition scheme by. What is the date on which they are withdrawing the composition scheme? You can see, so they have withdrawn the composition scheme since its turnover exceed 1.5 crores on 9, has opted to withdrawal of composition scheme on the set date. Now before the date, they need to like take the whatever closing stock that is there that can be availed as ITC, and that should be filed within 30 days from the date of exit. So 9th May you count 30 days. So in May 31 days, 31 minus 9, so it will be 8th June. Option C is the answer for this. Okay. So option C is the answer. Then next one, what we have, second question. So because within 30 days from the date of conversion, within 30 days from the date of conversion, within 30 days from the date of conversion, so they need to file this. In respect of goods sent on sale or return basis, Vittal and Company shall issue a invoice by, what is the date by which it should be given? 6 months from the date of removal or date of acceptance by the buyer, whichever is earlier. Goods sent on 10th June, 6 months from the date of removal. So June, July, August, September, October, November, December, and confirmation on 15 December. So 10th June, 6 months you count. So July, August, September, October, November, December, 10th December. But 15th December only they got confirmation. So on 10th December itself, 6 months is over. So 6 months from the date of removal, 6 months from the date of removal or date of acceptance, whichever is earlier will be taken. Okay. Then determine the amount of eligible ITC that can be availed by Vittal and Company for the month of August. So how much will be the amount of eligible ITC that can be availed by Vittal and Company? So eligible ITC, if you see, so here we discussed only 9,000 basically. So that is first GST paid on input services intended to be used for personal purpose, 12,000 cannot be taken. Motor vehicle 9,000 can be taken, and even GST paid on purchase of computer, GST portion was included as a part, so not available during the month. May Vittal and Company has reverse ITC of 10,000 for not making payment to vendors. Okay. So see this. So therefore, what will be the ITC that can be availed? What is the ITC that can be availed? So here they reverse the ITC for not making payment to vendors within the prescribed time. This pending payment was cleared in the month of August. So right now in the month of August, it can be re-availed. That is for non-payment of consideration to the supplier. So within 1 days from the date of invoice, we need to reverse the ITC. Again, as and when the payment is made, it can be re-availed as ITC. So therefore, this 10,000 also can be availed as ITC. So this 9,000 and this 10,000, that will be 19,000. Option B. Compute the amount of ITC to be reversed for the month of September. For the month of September, what happened? Wherever the payment is beyond 180 days. What is the payment beyond 180 days? 15,000. So that 15,000 needs to be reversed. Then time of supply in respect of service imported from associated enterprises. What should be taken as time of supply in case of associated enterprises? Date on which payment is made to supplier or date of entry in the books of recipient, whichever is earlier. What is the date on which payment is made to supplier? See here. So issued invoice, payment on 30th September, entry 10th October, whichever is earlier, 30th September. So date of payment to supplier. So we will not take 61st day, sir. No, that is in case of normal import of services. But import of service from associated enterprises, date of payment to supplier or date of entry in books of recipient. Date of entry in books of recipient, whichever is earlier will be taken. Okay. So that is the answer for this question. Then question number 46. So this is a comprehensive question. So that involves computation of net GST liability. So ensure that whenever you are doing computation of net GST liability, that is a comprehensive question. What you need to do is that you need to follow a template. So I am just teaching you what is the template that you need to follow. See this. First you need to see, so this is the presentation. So first statement, computation of gross GST payable on outward supplies. First you need to take that, computation of gross GST payable on outward supplies. In that computation of gross GST payable on outward supplies, first you see the transaction. Is it supply or not a supply? If it is not a supply, just write the note, okay, that it is not a supply, consequently GST not payable. Why it will not be supply? Because it is not specified in 7 subsection 2 and not specified in 7 subsection 1 also, or it is excluded from supply, it is not a supply, GST not payable, don't take it in value column also, CGST, SGST, IGST will be nil. Then suppose if it becomes supply but it is exempted, just write a note that it is exempted and GST again not payable, but take it into the value to find the total turnover. For ITC purpose it will be useful, okay. Then supply which is taxable under RCM means it is taxable in the hands of the recipient, not in our hands. So don't take the liability but add it in the value and it will be treated as exempted for the purpose of ITC. Then suppose if it is a supply and it is taxable under FCM, intra or inter, intra means CGST, SGST, inter means IGST. So this is your gross liability, and exempted turnover is useful for ITC reversal. Taxable turnover is useful for the purpose of Rule 86B, because in Rule 86B we need to pay 1% of our liability through electronic cash ledger. For that it will be useful. Taxable turnover is useful for checking applicability of Rule 86B. Then next, second statement, computation of GST payable on inward supplies under RCM. So whatever is your inward supply, suppose if it is not a supply, leave it. If it is exempted supply, also leave it. And if it is taxable under FCM, don't take, because it is taxable under FCM already, they would have paid. Whatever is taxable under RCM, that alone you take here. And even IGST paid on import of goods, if there is any, that should also be taken into this statement. Then computation of ITC availed and reversed. First you need to take whatever is the ITC availed. Even GST paid under FCM, RCM, eligible for ITC you will bring it here, and not eligible for ITC you will not take. Then you need to reverse the ITC. If there is exempted turnover, based on exempted turnover you need to reverse the proportionate ITC. You should not take and then add opening balance. You will get the net ITC eligible for utilization. Then thereafter, computation of net GST payable. First we need to take gross GST payable under FCM, statement 1. Next, minus ITC utilized, statement 3. But how much we need to utilize? Suppose if Rule 86B is applicable, 99% of liability only can be utilized. So Rule 86B is applicable or Rule 86B is not applicable. If Rule 86B is applicable, 99% of liability. If Rule 86B is not applicable, 100% of the liability we can utilize. And next, GST payable under RCM we need to add. Now you will get the net GST payable using electronic cash ledger. So this is the template that we need to follow, okay. Now these questions needs to be answered based on that way. First, Consult is Services Private Limited, a company registered under GST in Mumbai, Maharashtra, offers business consultancy, digital marketing and project management across India. The company recorded the following transactions in October. So basically you are required to compute not net GST liability. So this is not a net GST computation. So this is total value you need to compute, output tax payable, and then net GST payable. Even value of supply also we need to compute in this. First, they have provided consultancy services for market analysis. Provided consultancy services for market analysis to XYZ Limited, a registered client in Chennai, Tamil Nadu, for rupees 4,50,000. Additionally, the company paid an amount of 4,500 as professional tax applicable in the state of Maharashtra as per the requirement of local state legislation. The amount of professional tax was recovered as per section 15(2)(a) taxes, duties and cess by whatever name called other than GST should be included in the value. Okay, and here in the present case professional tax recovered separately, so it should be added 4,50,000 plus 4,500, 4,54,500 will be taken as the value, and all these are interstate supplies. All transactions are interstate, that's why we will have only IGST liability. Okay, so therefore this will be the value. On this value we need to compute the IGST payable. So this is the amount, and the value will be this. Computation of output tax payable, once we get the amount, then directly we will do the output tax payable. Then second transaction, digital marketing services for launch event. Conducted digital marketing for an upcoming product launch for Mr. A based in Rajasthan, who is an unregistered person under GST. The agreed fee for the said service is 3 lakhs. Out of the agreed fee, an amount of rupees 25,000 is incurred by Mr. A. The company was liable to pay the same in relation to supply, and net payment received by the company was 2,75,000 exclusive of any tax. They conducted digital marketing, so 25,000 is incurred by A. Actually A is the recipient. Okay, so out of the agreed fee 25,000 is incurred by A. The company was liable to pay the same in relation to supply. As per 15(2)(b), any amount that the supplier is liable to pay but which is incurred by the recipient should be included in the value. So in this case the value will be taken as 3 lakhs only. So 3 lakhs will be taken as the value. Then next, third, traveling payment for the team. The employees incurred an amount of 50,000 on travel to Kolkata for client project and claimed a reimbursement of the same from the company. As a policy, company charged such expenses from the clients on actual basis. So whether it will be included, so basically reimbursement, 50,000 on travel and claimed a reimbursement of the same from the company. The company charged such expenses on actual basis. Okay, so this 50,000 will be included in the value because it is like incidental expenses. 15(2)(c). Discount passed on to the customer. Post supply discount was offered to a customer amounting to 50,000 against a supply for which invoice was issued in September. The customer has not reversed the ITC. As per 15(3), if the customer has not reversed the ITC, then we cannot reduce it. So that should be ignored. Then next, recovery of late payment charges. The company received an amount of 1 lakh as late payment charges for delay in payment of consideration from a client whose service contract was completed in June. And this late payment charges is recovered. So therefore, as per 15(2)(d), interest, late fee or penalty for delay in receipt of consideration should be included in value. Then they made a purchase of car. This is their inward supply. A car was purchased in the name of the company for use by the director. Total cost of the car was 10,50,000 inclusive of IGST. So for use by the director, no ITC. ITC cannot be availed on this. You can see ITC computation. So purchase of car, ITC not available because capacity does not exceed 13 and not covered under exceptions. Then next one, insurance services. The company paid for insurance of the above new car amounting to 25,000, which includes IGST amounting to 2,300. So can they take ITC with respect to this? As the car is not eligible for ITC, even this service also not eligible for ITC. There is no ITC with respect to this 2,300. It's also block credit. Then procurement services. The company received interstate supply of services used for business purpose on which GST paid was rupees 45,000. Said credit was not restricted under any provision of GST law. Means ITC can be taken 45,000. Then next one, sponsorship. The company sponsored a sports event when it paid an amount of 2 lakhs to the event organizers. So sport event, we don't have the information that it is a recognized sport event. So due to that reason, sponsorship service RCM So we need to pay GST and RCM, and that can be taken as credit. So therefore 2 lakhs into 18%, 36,000. First RCM liability it will come. Moreover, we can take even ITC also with respect to this. Now, so we need to total the value. Value will be 9,04,500. On that, CG, that is gross liability 1,62,810 minus ITC 81,000. We can reduce the remaining plus RCM liability 1,17,810. Remember, for computing the net GST payable, gross GST payable under FCM minus ITC, then add RCM liability, that will be the net GST payable. So this is how we need to do the computation.